But let's look at more of this morning's movers. We're going to welcome in Jenny Horn. She's the host of Next Gen Investing. Jenny, thanks for joining us. Goldman Sachs updated its conviction list this morning, and we have a name on it added, NVIDIA. Tell us what's happening today.
Right, Renita, after we did see the Magnificent Seven, or Elite Eight, as Tom White does say, pull back over the course of September and the last quarter pretty significantly, seems like analysts do see a buying opportunity for NVIDIA, which has consistently been the strongest performer. I can't even really call it one of the strongest performers, because in the S&P 500, it's still the clear best performer on the year, and by a good margin, Meta being the second. But analysts still really like this name. Goldman Sachs did add NVIDIA to the firm's conviction list, keeping a buy rating on the shares with a $605 price target, which does imply, basically $160 of upside from where we're currently trading. But the analyst does expect the company to maintain its status as the accelerated computing industry standard for the foreseeable future, given its competitive moat and urgency with which customers are developing and deploying increasingly complex AI models. Now, NVIDIA does still lean more optimistically among those other analysts that do cover it. We do see its average rating currently being a buy. It's just right now, I think timing the NVIDIA trade has been quite difficult, because again, it has seen a pullback, not as much as the rest of the market perhaps, but there is the idea that maybe its AI run has gotten ahead of itself. We could see it come down to earth when it reports at the end of November, but obviously we'll have to wait and see. Shares are up 1% today, so hey, we'll take it. They're able to be more resilient in the market volatility than so many of the tech peers, which has been kind of amazing to watch.
Still up more than 200% year to date, and even more so when it looks at the last 12 months. But let's move over to Salesforce, because Goldman removed Salesforce from its conviction list. Why did they do that?
Right, a little bit of different sentiment today in Salesforce. Like you said, we did get reports. Goldman Sachs actually removed Salesforce from their conviction list, keeping a buy rating on the shares with a $340 price target. Also does imply some significant upside. $139 above where we're currently trading in Salesforce shares. But the firm did make this change with the October update to the firm's American conviction list, director's cut per reports we got. So this is right now just the rebalancing of what they do see as their conviction list. Now, right now, Salesforce is undergoing a pretty massive transformation as a company. They've reduced some of their real estate offerings. We do know we have actually one of their newest buildings here in Chicago that I have heard sits mostly empty, which is horrible, but just the reality of the situation now. And they also have scaled back their workforce. They are trying right now to mitigate some of their overall costs, while also still, grow pretty significantly this year. So this is a definite different story than NVIDIA. While they do try to be AI exposed, this is a perfect example of how AI does not impact all companies' stock performance equally.
Well said, Jenny Horn. Thank you so much for looking into those two names for us.
Thanks, Renita.
Of course. Now, for more movers, let's welcome in Jeff Pierce. He's Senior Manager of Derivatives of Trading at Charles Schwab. Jeff, we want to focus on the car companies. We know that the latest delivery numbers are coming out for Tesla. If they've not already come out, have they come out, and what do you have to report to us now?
Yes, Tesla has released their numbers. We're seeing the stock down just over 2% after they came up shy of expectations. On the delivery side for Q3, Tesla came in at 435,059 vehicles. That's down from the Q2 466,000, so down about 31,000 vehicles altogether. Total production for Q3 came in at 430,488. That's down about 49,000 from what we saw in Q2. Now, some of this was expected. The decline we're seeing here is in part because they had shut down some factories, which they let us know they were going to do. They did that in preparation for the updated Model 3 and the Cybertruck. If we look at some of the past delivery numbers from last year, we're certainly up year over year. And the company said, in terms of their target to deliver 1.8 million vehicles in 2023, they are still on track to do that.
Still on track to do that. And you noted that they did have to shut down those factories. We're looking at, did they actually shut down the Austin and Berlin factories during the time, or was it a system-wide shutdown?
Yes, those are the two factories that they pointed to for shutdown in order to get them prepared for the new vehicles. We've also, of course, in terms of the deliveries numbers, we've seen Tesla really cut prices over the last year several times. The market in terms of EVs have been very competitive. There have been some investors out there and analysts that have questioned some of these price cuts, but Tesla's pointed to it really driving demand. They've also, been able to make these cars available to those federal tax credits that we see that tends to drive some of that demand out there. Earnings are coming in October on the 18th after the bell. I think we're going to hear a lot more about this information on that day.
For sure. You know what I always wonder, Jeff, if Tesla has created difficult comparisons for itself by having that ramp up in production, and then next year it may be a different story. What do you think about that?
Yeah, absolutely. It's been a tough year. I mean, if you look at some of the numbers we've seen, Tesla's Q2 revenue, $24.9 billion, that's up 47% year over year. That growth certainly has looked impressive, but it's been a slowdown from what they've seen. In 2021, they saw sales jump 71%. In 2022, they saw them up 51%. So these macroeconomic headwinds, higher interest rates specifically, are certainly putting pressure on these companies. And them being able to cut price is a strength, but it also has made this market very tough in the EV market. Their margins are a lot slimmer. Operating margin fell from 14.6% to 9.6%. In the last report, and that was a lot to do with those prices getting cut.
You also wonder if the demand is actually still strong for Tesla. Now, we understand what production and deliveries look like, but are people actually wanting more of these vehicles as we go along, or is it a build them and they'll come sort of sales strategy?
Yeah, I think the volume and the demand has stayed relatively strong in the face of a lot of these interest rate headwinds, as well as some of the inflation headwinds we've seen out there. But it is certainly becoming a tougher market, not just because of some of the macroeconomics out there, but also because of China and the big EV names they have there. Certainly in the U.S. as well, we have some strong EV names. We've seen some of the big players out there switching over to EV, really putting a lot of money into it. Tesla has stayed strong as one of the leaders in this area. But the pressure is mounting, and certainly demand is strong for EVs. That still remains the same. That demand is starting to really fan out among the many names that we're seeing hit the EV market.
I'm glad you brought up China, because China car makers also reported their numbers today. What did they come to?
Yeah, we're seeing several of those big EV names reporting large increases in China. NIO, let's start there. They've got September deliveries, which rose 43.8%, coming to 15,641. Excuse me. If we look at the breakdown there, about 11,500 SUVs, just over 4,100 sedans. Q3 deliveries up 75.4%, coming in at 55,432. If we look at total deliveries now for NIO, they've now reached about 399,549 vehicles. Let's look at XPeng as well. This is the stock that's really shined year to date, up about 81% coming into today. September deliveries rose 81% year over year, coming in at 15,310. The G6 deliveries hit about 8,132 in September. For total Q3, those deliveries rose 72% quarter over quarter, coming in at 40,008 cars. And then finally, we've got Li Auto. This has been one of the companies that's really shined in terms of delivery numbers. In fact, they just said that there's China's first new energy automaker to reach a milestone of 500,000 vehicles. In Q3, they delivered 105,108. That was up almost 300% year over year.
So Li Auto is becoming some really tough competition for Tesla.
Yes, absolutely. I mean, if we're looking at some of the numbers out here, their sales have grown substantially more than I think a lot of people anticipated out there. If you look at September deliveries, up 212%, coming in at 36,060. That's a new monthly record for the company. And, if we look at the reports, I mean, the company's been doing relatively well. I mean, earnings per share, it was a loss, but it came in at 45 cents versus the 36-cent loss expected last time. Revenue, $1.21 billion. That's down 22% year over year, but still, the numbers have come in well. There is a lot of pressure on the pricing as well, and that's what we're seeing across a lot of these companies.
Absolutely. Pressure on pricing, pressure on upping those delivery numbers as well. And let's look at Rivian, however, because Rivian received an upgrade this morning. So tell us about that.
Yeah, Evercore ISI put Rivian at outperform from in line with a price target at 35 up from 30. They talked a lot about whether or not they're kind of the next Tesla. Is that the question out there? And the analyst doesn't really care for that question, but they do see some similarities that they have made between Tesla and BYD. In this context, the firm thinks that outside of Tesla and BYD, Rivian is the only OEMs showing increased evidence of meeting all three criteria. Some of what they're looking at, they're focusing on their brand velocity of the R1S and the R2, to further expand with an SUV and path to 15 to 20% gross margin. They also said that they've executed on both cost and delivery targets. And they're looking forward to seeing a solid production and delivery to be reported in Q3. Those numbers are out, by the way. Q3, Rivian produced 16,304 vehicles. That's up from 13,992 in Q2. They also delivered, deliveries were also up 23% quarter over quarter, coming in at 15,564.
It looks like it might, I mean, in your opinion, do you think that is the next Tesla, or are you looking at Li Auto or any of the others?
Yeah, this is a tough one because Rivian has certainly had a lot of issues. I mean, they are hitting targets now. They expect to hit their full year target of 52,000. They only need to do about 12,300 vehicles in the next quarter to reach that. They raised that guidance back in August after some of the supply chain issues had started to ease, and that was a big issue for the company. Supply chain really put pressure on Rivian in a way that we didn't see across some of the other EVs. They also improved their EBITDA guidance too, 4.3 billion instead of a loss of 4.2 billion. So the numbers have looked okay, but they have had a lot of struggles. I would say the supply chain issues and inflation hit Rivian pretty hard over the last couple of years.
Okay. Now, meanwhile, let's switch over to another stock that has nothing to do with cars, but has to do with deliveries. FedEx. Its rally continues after another upgrade. What's the story?
Yeah, we'll keep the deliveries going here. FedEx, Susquehanna upgraded FedEx to positive from neutral with a price target about $315. That's up from $225. The analyst says that the long-term view is an upside opportunity in FedEx from a cost realization.
Good morning. Welcome to October 2nd. We're going to be streaming stocks, options, futures trading today. Hope you guys had a good weekend. It is Happy Money Monday. Here we are. Beginning of this quarter is Q4. You're rested, well prepared for the week. No silly mistakes. We have big data this week, I think. Good ISM manufacturing at 10, so that's in 15 minutes. Construction spending as well. Tomorrow we have job openings at 10. Wednesday, ADP employment, factory orders, and ISM. And then Thursday, initial jobless claims, U.S. trade deficit, and Friday, U.S. employment report, and U.S. unemployment rate. U.S. hourly wages year over year, and then consumer credit. So initial jobless claims probably the biggest ones this week. Maybe job openings on Tuesday. Those are pretty similar though. Yeah, we have a little kind of gap up on SPY, I think, and it's sold off. I'm not sure what if there was news this morning or not. Open negative. Now we're just bouncing around green a bit. Looks like barbecue is canceled at this point. I'm not sure what's going on with GME, but it's pretty ugly this morning. Very ugly. I saw a couple of news articles here. I'm not sure. Ryan Cohen seeks extreme frugality at GameStop. This isn't giving any reason for sell-off this morning. Too late for Ryan Cohen to save Bed Bath & Beyond? Crazy that they would even suggest such a notion in Investor Place. Interesting. GameStop Corporation CI stock underperforms Friday compared to competitors. Ryan Combs GameStop Gambit raises Spectre spotty record. What is this? In a memo to employees Thursday, Cohen emphasized GameStop's need to be profitable and said extreme frugality is needed. That's where they got that. I'm not getting paid, so I'm either going down with the ship or turning the company around. I much prefer the latter, he said in the memo. I guess there was a internal memo that was floating around. That could be part of the sell-off on GME, I'm not sure. This is kind of unusual though, 4.25. Market's not like down much. 1574. There you go, you're getting close to that other support. I guess this could just be some TA. Keeps rejecting the resistance, at some point it's going to start dropping. Gonna drop, consolidation, we're dropping. Well, bear flag till it isn't. AMC's up 3%, butting right up against that resistance again. I just came down below VWAP there. A pretty awful Friday trading. Happy to be 2 days away from that. I did end up going back and reviewing. It's good to always review. I don't like playing breakouts. If I do, I want to play it only on a retest. Otherwise, I'm going to be picking up at the other end of the channel on SPY. Good morning, Guts. Had a good weekend. Hope you did as well. Morning, Maui. Barbecue or Butterfly? Yeah, so Butterfly, is that a public company? What is it? Is that publicly traded? BFLY, is this it? I think this is actually it. I don't know though. I really don't know. Here's on AM or GME dropping. I saw Rich and I being sorted with barbecue. Morning, Busy Bee. Yeah, we're getting close to that support there on GME. Morning, Macaron. If Spy retests a shoulder over here, or an inverse head and shoulder. I also have a head and shoulder, so there's consolidation for you. Might be kind of a choppy range-bound day. $15.71 on GME. Eyes coming down there. Yeah, barbecue's not trading. Bon voyage. AMC up to 3.5. Are you guys able to sell your barbecue? Have you tried? Tried to sell a share? There is a test on low of the day there for Spy. Might pick up some puts on a bounce. Little inverse cup here that's formed. But we're also getting close to that shoulder, so I'm not sure. I guess it might not hold that, but... Also have that report in 7 minutes. I think I can trade on my E-Trade account now. I'm probably going to be doing credit spreads on Spy again. AMC's up 4.5 now. Although I don't think I can do dailies on Spy. AMC breaking out there a little bit. Nice bounce on it. I don't know if... What? 2,000 XP. Bounce off the low. 4.5% on AMC. Another horizontal resistance up here. 850. Yeah, grabbing a couple puts there. Dang, this Yaz is pumping. Might go back up to 100%. Might be early, might be wrong. Hopefully I'm not early and wrong. Morning, Mark to Shark. No, not seeing any news, Mark. It's maybe just a technical drop. I'm not sure. It's kind of strange. It's buttoned up against that resistance for so long. Yeah, it's still getting dunked on. There's a couple news articles out right now that got dropped, but yeah, I mean, maybe it is from that. There was an internal memo telling employees, Ryan Cohen telling them that they have to practice extreme frugality and that he's not taking any pay. So that's probably what it was, actually. That's pretty bad if you think about it. It says he's not taking any pay, so if this ship goes down, he's going down with it. Yeah, now that I'm remembering what that said. Something along those lines. Let me see. They quoted it too, so I think it's legit. Let's see. Yeah, it was this Yahoo article. And memos to employees Thursday. That was Thursday though, so maybe they just got news of it today though, or this weekend. He told the employees they needed to exercise extreme frugality. And he said, I'm not getting paid, so maybe they're going down with the ship or turning the company around. I much prefer the latter. I mean, yeah, that could be part of it. It was on Thursday, but maybe didn't get released till, or leaked or whatever until weekend or today. Top Warrior's up 5%. Whoa. Oh, that was the data. Look at that gap on SPY. How weird. Forgot that data was coming out. Jumpy. Probably should have waited till that came out. Oh well. Oh my gosh. Look at that candle. It's not like significant data. What? Yeah, I should have had a stop there. Whoops. What is it even? There's a retest of the high. Yeah, that was ISM manufacturing construction spending, so pretty big reaction from that. Quite large. Got a low of the day test, high of the day test. Market's still very jumpy from that data. It's like it's still coming out. Weird. The volume's still elevated. Must have been way outside expectations. Picking up some mega caps. AMC's up. Active VWAP for AMC. SPY new high of the day there.
Oh, that is gonna whip.
Where is he speaking? I don't know. I didn't know he was speaking today. I haven't heard that. AMC's coming down here. GME still selling 1550. Nice, Mark. Fingers up 12. GME's down 5.5. 1553. I think it's got to be from that memo. AMC's coming down more. It's only up 1.6 now. Red Head and Shoulders on NASDAQ. Where was price stuff in? What are you referring to? What's the reference? What? 15,480 GME hit. So it broke this low. 15,410 is this one. After that, not much support until years ago. No, it was from mid last week. But when was it released? When was it leaked? That's when he sent it to his employees. It apparently was on Thursday. When did the media get a hold of it? Did they release their articles? Because this is the first I've seen of it today. And yeah, it came out yesterday. But that's different than pricing things into. Pricing thing in is it making the move in anticipation. There was no anticipation of a bearish memo coming out. There you go. There's 6% on GME. Also new low there. Coming back down to VWAP. Hold on until it push down, maybe. Yeah, but I mean, there's no way to know when the media sources got the information of this internal memo. Yeah, I mean, GME's been building up liquidity for 3 months. Whole range of consolidation. Ready to dunk on it. I'm back to VWAP, doing the VWAP chop now. Run is down 3.7. ROM is up. It was all over X. Oh, last week the memo? Oh, that's what they're... Yeah, I never saw it. I heard about it. People were saying it was fake. Yeah, I briefly heard about it, never saw it. That's right. Yeah, I didn't look into it, so I totally forgot. Unless it just keeps dumping mark and that RSI comes lower. I mean, the next support after these 15s is like really 10. There you go. It broke those levels. 1537. That's it. Not a hard rule. I mean, it definitely could bounce anywhere here, but yeah. Let's set up a divergence with here, back here, sorts. Unless it gets low enough and that RSI comes lower. Good. Down 6.7%. It's pretty big. 13. Yeah. I mean, somewhat in here. Yeah. I'm thinking 10 more though. Even number. We also have this support here, this resistance up here. A little fleshy flush on SPY. If it finds the bottom of this channel. Nice RSI divergence on Peloton. Bouncing back up to VWAP. GNS 8324 up 0.5. I don't think you can buy it. I mean, it's not trading. I was asking you guys if you could sell it. Just try and sell a share, see what it says. But yeah, there's been no transactions this morning. AMC almost back to break even on the day. Things just getting wound tighter and tighter. Chop. I was hoping for a little bit more of a test on this channel, but that might have been it. Okay. Back to VWAP. GME's down 6. AMC's red now. Didn't want to hang out up there. If you're gonna bounce off the bottom of this wedge now. It's not necessarily done. I mean, maybe it is. There is still a shell company, I think, of Butterfly. It's been transferred to Butterfly, so that gets first merged or taken over in some way. Then you might get new equity in those shares. Sell only. Are you able to actually sell it though, Jack? That's what I'm wondering. No worries, Hyun. Glad it wasn't a secret JPAL meeting that I didn't even know about. Butterflies have no concerns for such things. Spy back below VWAP now. Might add to my puts if we get a break of this channel. Give me a bounce a little bit back to VWAP. GNS is down 2 now. Always a reason why the option IV is high. EBIX really sold off. We theta farmed that for a little bit. I didn't stick in there. Closing one of these puts. Don't like the chop. If we get a break, I'll add back into it. Oh, Randy from South Park. I didn't watch enough South Park to know quotes from it. Big Lots is down 4.7. Buy back up to VWAP. Still doing the chop. Got horizontal resistance here. Let's see. Choppy. LAC's down 6. Kind of break that upper channel though. See if it's on its way up. Alright, coming up on 10:30, 1 hour into the stream. An hour into the trading day. Guys had a good weekend. Happy Money Monday. Got 8 likes on the board. Not very happy money of you guys. Still doing its chop. GME down 6 1/4. 1543. ACB down 5. Pretty big sell off there too. Yeah, wheat stocks haven't had a second pump. Why GME's down? I'm not sure exactly. It could be from this memo that the media just pumped out. That's at least the excuse I think they're giving it. It was an internal memo. I know some people think it was fake, but I'm not sure. Between Ryan Cohen and the employees, saying they have to practice extreme frugality. I didn't research enough to see why someone would think it was fake or whatever. But also that he's not taking a pay, and if this ship's going down, he's going down with it. So it's either going to work. Oh, there's your flush. Going to work, or it's not. But he's not taking the pay. So there's the break on SPY. Little head and shoulders there, you can see on the 1 minute, 5 minute probably too. But we're still kind of stuck in a chop. We also had that RSI divergence on the 5 minute. That's why I held on to those puts through all this. And because it just ripped so quick after that data. Didn't really have a good exit. There's your bounce. Dang, that's choppy, man. Wow. That is ugly. I don't think I'm gonna add to the puts. I have one. I'll just hold it for now. I want a better setup, maybe in the afternoon. Predictions for next week on GameStop. Might be the beginnings of some flushing on GME. I mean, it built up a bear flag for like 2 months here, just consolidating. Now today we're breaking through support and clearly rejected that resistance all along the way. So, yeah, might be seeing some flushing on here. Head and shoulders on NASDAQ on the 30 minute. Yeah, I see that on SPY too. Kind of thought we were going to get a bigger bounce. I haven't gotten back into my January puts on SPY. But we could still come down and test some of these lows and still come back up and fill that gap, so I'll wait. I think on a gap fill they'll start to scale in. Go back in, probably get February's too. Good morning to play some poker. Yeah. Even if it shut down, it still wouldn't have been. I think oftentimes it rallies a little bit when the government shuts down, and a lot of that was priced in, even if it was bearish. I think on Friday, for government shutdown. So. Dish down 3 1/4. Ugly. Yon's down 2. AMC is pretty much flat now. Rumble's up 1.7. The SPY chop is ugly. Should have gotten out of my put here. We'll see. If it breaks VWAP, breaks above this channel. Teladoc breaking through that support, down 2 1/4. Staying below VWAP. That's true, Mark Shark. Well done, man. Good day to you as well.
The RSI, you can see on the lower side of our chart there, we did make a high on the RSI, a relative high, and we were making a closing price above that level here, but it's not matching the RSI there. So perhaps a little bit of a precursor to some consolidation or even a downward move here. But what I was really curious about is the last couple times we've made our way into the overbought area, it's been the precursor to a bit of a sell-off. I'd be curious if that would happen again, if that were to happen here. Now, in terms of support and resistance, our moving averages, we've outpaced them pretty significantly. Our closest one is our yellow 21-day EMA near the 45.25 mark. But before that, obviously, we'd need to see if we would hold the line at 45 to the downside first. To the upside, we've got our upper trend line, and then we've got our +2 standard deviation channel coming in just above 49. So some fairly clear boundaries to watch here. And remember, as we continue to rise upward, that +2 standard deviation channel will continue to update with price. So not saying that's the level that's going to be something that you would need to watch necessarily in a week or so, just a study to keep on your chart and consider if we keep making those highs, because it's one of the few ways we can project where you might see potential.
I wonder if Black Bear's going to hold this trend line.
As you noted, the stock significantly outpaced its moving averages, and we'll keep an eye on that one as well. Rick Ducat, thank you for joining, and Jenny Horn, thank you so much for bringing the fundamentals. Coming up, Caroline Woods will have the latest on Sphere Entertainment's big rally this morning live from the New York Stock Exchange. Then it's market meeting.
Actually, at GameStop. IV's still low on this thing, isn't it? Pretty low. There you go, Spy. Boy. Nice. I actually did end up adding my puts there. So I need to close some. Closing one there. I'm putting a stop on these. Okay. Yeah, put a stop on the rest of them. I added a couple more puts there. This little head and shoulders and the channel break. So it broke the channel, came down, bounced, a little head and shoulders below this bullish channel. I got some right here. Now we're back at the low of this channel. See if it breaks below that. That'd be quite bearish. Probably stay in this channel though. There's a test of actually pre-market lows. There's your bounce, bottom of the channel. I'm about to get stopped out of the rest. No problem. and I'm out of the rest. Okay. My plans on GME? Might do some cash secured puts on it. I'm trying to be patient though. You might get a little bounce on it, but the options on it really do suck. So, how much liquidity? Now the IV's pretty low, so selling them isn't that great. Buying them isn't great either because it hardly ever doesn't do anything. Trades like AT&T now. Look at that bounce, oh my gosh. Bounce on the bottom of that channel was aggressive. Might be breaking to the upside now. Oh, choppy. So, got a head and shoulders here. Tested the low. Could still be a bearish day. Happy Money Chop Day. All right, send a message out to the Theta Firm members on YouTube. Closing a position. All right, see if SPY wants to climb up and test VWAP. That'll be my assumption.
Continues to be really important. That's the component, that's really exclusive.
Why is this so
to
quiet?
the Friday number. Throughout the week, though, I think it's going to be really interesting to kind of.
I put this one at 50. Whoops.
What sectors are doing well? Where are we seeing hiring? Where are we seeing weakness?
There.
We were just
All
talking
right,
about
SPY
some
climbing
of
up
the
to VWAP.
Caroline was just talking about some of the kind
Prefers
of
to do the chop
service-oriented
at the
stuff before
VWAP.
this, and there's still a really strong demand there. But you put that kind of in context of the student loans, starting back up and things going on. Like there's going to be less money to spend as inflation remains persistent and costs, in other ways rise. So what does it look like from a sector perspective, I think is going to be the most interesting. And what do those wages look like come Friday?
Absolutely. And we've already gotten some key manufacturing data earlier today. We're looking at getting more of the services sector data in as well. But Nick, your thoughts, or not Nick, Joe, your thoughts on the Friday's jobs report and what you'll be looking forward to.
Well, I think the biggest takeaway is going to be, where are we seeing the biggest wage pressures? Because I think that's what the market's going to be taking into consideration. I think, one of the things that came out of the manufacturing report today is that the prices paid components actually went down. So
AMC now down 1%.
Beneficial for the
SPY
overall
just
economy and the markets.
projecting
but,
VWAP.
With wages ticking back up, absolutely have to kind of keep an eye on that in terms of that unemployment report. Watch the wages.
Joe, take us home with crude oil because it just
Take us
fell below
home.
$90 a barrel. What do we think happened there, and what could be, the end of the session, perhaps?
With crude itself, it's been a supply story, not necessarily a demand story recently. Kind of the pullback of supply is what we've seen. It's been pushing up the prices higher. I think there's been some positioning amongst the futures and the options traders that have kind of helped along those lines as well too. And I do think if we start to see a bit of an equilibrium with the demand story, if we start to see that continue to maybe pull back a little bit, you could get a little bit of respite in the crude prices. But when I look at what have been the star performers in Q3, we had almost every sector down except for energy and communication services. And you can see that, energy's really paved the way. So that might be a story going forward to kind of keep an eye on.
Not only a lack of equilibrium with demand, but as we talked about, oil prices and gas prices at the pump, gas prices are going down. Nick, any insights just on what's happening with the oil picture right now, with the crude oil picture?
Well, I think oil itself is interesting, but the whole energy complex, I think, Renita, also for me going into the fall and winter is going to be interesting. Here in the northern part of the U.S., it's supposed to be a bit more mild winter. I don't think that's the case in Europe, and I think kind of seeing energy prices go into the fall and winter, how we sort of stand with natural gas, heating oil, the whole energy complex, because there's such a kind of I guess an understated story now with the ongoing war in Ukraine and Russia and what they're doing to deal with energy supply in general. And then you've obviously got the OPEC plus kind of restriction and how long that's going to continue. I think if we get they obviously want to keep prices high. So if we get any kind of change there in the story, I think it could affect the entire energy complex, not just oil.
Absolutely. We'll be looking at that. Nick Theodorakos and Joe Mazzola, thank you for joining us. That's all we have for Morning Trade Live today. Trading 360 with Nicole Petalides is coming up next.
You know that tech stock we
SPY come down a little bit more here. Still stuck in chop. So on the econ calendar, it says Powell speaking at 11. So maybe you are right. We had the ISM. It says Powell and Harker at 11. See if I can find that. Oh, round table. All right, we are getting PAL today. Wow, you were right. So I should get some volatility. Still waiting. Still waiting for them to go live. It's supposed to be at 11. Market's pumping up here a little bit. Oh, here we go. Here we go. Got first today. Pow pow. Buys ripping. Just on the presence of J Pow. Oh, there's no audio yet. Morning, Tasty. NBC didn't start the stream any bit too early. You know, you can start the stream before they're talking. And hit the audio too. Casual Happy Money Monday for Pal. Well, we'll just keep yazzing, I guess. Probably won't trade until Pal's done. Unless there's something clearly directional that he says. Just rolling the dice otherwise. They're talking. Talking. Oh. What the heck? What kind of audio is this? Just using the mic on your camera? What? Oh my gosh. Market's selling off because I can't hear him. See if this one's better. Dude, they didn't give him a mic. CNBC didn't get the mic plug. Let's check.
I'd like to first again thank all of you, the roundtable participants, for taking your time. You're really busy and taking your time to be here today as well. So I first wanted to turn to Kevin. Can you do an introduction? I think you already done. Okay. Yeah. So I want to turn to the first with Kevin. And hand the floor to you to talk a little bit about what's happening here. You know, what are you seeing as the head of the YCEA? What are the opportunities? What are the problems? What are the issues you're still working on?
Sure, and thank you again to President Parker and thank you to Chairman Powell. Your teams have been incredible to work with, so we really are very grateful for all the work that you're doing and for coming to York today to really shine a spotlight on the work that we're doing at many of our community partners around this table, and then so many others outside.
I can't find a better stream. You guys have one, let me know.
Opportunity on the roof of New Yorktown to really take a panoramic look at York County and talk about where we're doing well, but also some of the challenges that exist. And I would maybe set the tone by saying, like a lot of communities, the pandemic really compounded issues that existed prior to COVID-19 and only made them worse. So, in many ways, we're working back towards this, but in spite of the pandemic, in 2020, this community issues that existed prior to COVID-19 were just compounded. And the work that our team and the New York community has done for a national cohort with the Philly Fed has really been immeasurable and has led to a lot of the work that you're seeing today. Here we sit as we focus on some of the people-centered programs. We also focus on building place. And where we sit here today in the Yorktown Hotel, a $70-ish million economic development project in the York community to ensure that this building remained a complementary asset. But we weren't just focused on the bricks and mortar, we were focused on the people inside. Tatiana, I know you had a chance to meet, but we worked closely with partners in higher ed, like your college, to marry 4-year degrees and hospitality major that your college has. But we recognize that it's not a pathway for everyone. So this community created a hospitality certificate program. Tatiana is one of those graduates and is now working here at the Yorktown Hotel. And then finally, really with partners across this table, we've been able to focus on important needs like childcare. And this community has been able to raise millions of dollars to roll out several initiatives, not only to address access to quality, affordable childcare, but also growing the number of teachers in the childcare industry. It is the #1 reason that employers cite in terms of absenteeism. So we need to do a better job, not just here in New York, but across the country, in addressing the needs for childcare. So I know that was a lot and a little, but really all of the work that we're doing is rooted in data. The work with the Philly Fed continues to pay measurable dividends, and it has continued to create new collaborative partnerships to focus on housing, to focus on our cultural arts sector, our outdoor economy. And we're just very grateful today for the spotlight that you're helping to shine and the work that will continue here forward. And on behalf of the York County Economic Alliance, I would like to shift the discussion and ask my good friend, to my left over here, Kim Bracey, who's the president and CEO of our York YWCA. Kim also happens to be a former mayor of the city of York.
No, barbecue has been canceled.
Households throughout York County are experiencing our current economic conditions.
I don't know what else to say. Over. No trades this day. You can see if you can sell it. I don't. You probably can't though. I don't think there's even a market to sell it. So. How did the media not get a mic feed? I think barbecue's over. You guys might be getting equity in another company. But as far as being able to buy and sell barbecue, that's over. Unless you can, let me know. Didn't go private, and it's not tradable. Eyes climbing up. Ugh. Oh, 2 pair. Doesn't matter. Yeah, when's the last time you were able to buy more? Been like at least a couple weeks, right? Or no, Canada, you guys could buy it a little later into expert market.
If I could also invite, we have great partners in our employers.
Oh, unfolds.
Delighted to have with us today our largest employer in
At least there's not a flush. There's a straight out there. There's definitely a 2 pair out there also. Wow, nice river, bud.
closely on the heels is at 17% is healthcare.
Nice river.
Certainly been growing.
You raised with that hand?
Today with the President and CEO of Wellspan County's largest employer at Central Pennsylvania, Ms. Roxanna Gapster. I was wondering, Roxanna, if you could speak to what are the public health conditions here in your county?
Yes, absolutely. Thank you very much, Kevin. Delighted to be here today. Thanks so much for being with us. Public health conditions in York County are underfunded and not big enough. And as you know, we just came through the pandemic, and I would say without our health systems across South Central Pennsylvania, we would have really been in tough shape in terms of public health. So the one health department in the county of York is in York City, and they have less than 5 employees working for them. So what less than that? Yeah, I think it might be 2 or 3. But and so what happened during the pandemic was that health systems really had to work toward what were the preventive needs of the community and fulfill those needs. And so what we saw were open air testing sites, vaccination clinics being set up by health systems across our geography. At Wellspan, we within 4 to 6 hours built an online scheduling system, and within the first 24 hours after the vaccine was released, we had more than 50,000 people signed up in our area to come and get a vaccine at Wellspan. In fact, we had people from as far away as Philadelphia and Harrisburg signing up because we were very quick to get.
Yeah. Yeah, I mean, when you get it, it's going to get canceled. You had to assume you couldn't sell it. You're holding through it being canceled. Your only hope was they're going to get equity in a new company, which maybe it's Butterfly. I'm not sure, but yeah.
I will just mention a couple of other things about healthcare in the county. Certainly for our long-term care facilities, in those businesses, we are seeing, of course, the workforce issues, not just in healthcare systems, but in long-term care. And with the new staffing
help in the sales and marketing, process improvement, manufacturing, technology, and workforce. We like to say they help them top line, bottom line, pipeline. So we're working with them holistically in their businesses as they try to grow and thrive in those businesses. You heard some of the stats. I always like to say that
His eyes ripping there.
we have one of the most highly diversified manufacturing bases. There's not an automotive industry that drives everything. There's not.
No idea why.
If you pick an industry, we have life sciences, we have pharmaceuticals, we have vehicles.
Powell's not even speaking. They built up a lot of liquidity this morning, though.
That diversified base provides some protection in downtimes, which is wonderful. And it helps maintain us, which is a fantastic place to be. But the other thing it's been doing, in my opinion, is, and I think it's a huge challenge, I think of this in terms of land, labor, and capital, that whole economic framework. And for the past 20 years, I would say that the labor has been the only constraint that's existed among us. And in the current environment, with rising interest rates, there's certainly now constraints on the capital that's established in the tax land as well. But there's no doubt there's a constraint within capital. And the workforce we can talk about forever. There are so many partners at this table that can get into that. I'll stay on that lane. But when I look at my biggest concern in the region is we are lagging behind in the investment of advanced technologies, automation, CMMC. You kind of pick that industry.
Way to be a go-getter. Pal's not even talking. I don't. It's weird.
That is problematic on multiple levels. And even though there is a rising cost of capital, these investments have to be made because they're going to drive productivity. Productivity drives GDP, and GDP drives wages. So if you want to be able to have more career pathways that have pay scales that can afford healthcare and childcare and some of these other ancillary things, there is no doubt we need to have a highly productive workforce and a highly productive manufacturing sector. So that's, to me, the biggest constraint and area of concern that I see is our lack of adoption of technologies. And part of that diversified base, I think, is a little bit of why not. There isn't an automotive industry or an industry cluster that forces and drives that adoption of technology. So our manufacturers definitely need to make those investments. And even with rising interest rates, there's almost always ROI on those investments. There's no doubt that the work is there, the return is there. It's just a matter of kind of stepping up. And look, I kind of believe we're potentially heading into kind of a post-Bretton Woods world, and we're going to see more and more nearshoring, onshoring. Those initiatives are going to be extensive, and we need to have a manufacturing sector that is ready to take on these challenges and provide a highly productive environment and do it where they're competing on a worldwide stage. So historically, we made everything for hundreds of years, and that's phenomenal. And that's a whoa. I'm kind of an optimist. I mean, I'm wearing a black and gold tie, Steeler fan, so that you have to have a top. So while I see concerns, I'm highly optimistic. It's been an unbelievably adaptable and resilient sector for more than a century. So I believe, and that's the thing that every day I wake up, kind of the relentless pursuit of what keeps me going is to, keep talking to manufacturers, keep having them understand the entrepreneurs that are starting or maintaining these businesses and growing them. They continually are trying to adapt and advance new customers and their partners. So I think we will get there. It's just, are we getting there fast enough? Historically, you see all these great brands, and Harley's a wonderful name-face brand in New York, but I don't deal with the Harleys as much as I deal with the smaller folks. And one of the things I want to talk about was while you see slow to adopt, you also see some huge success stories. Pan Air last week, Governor Shapiro was in town to announce a major economic development initiative. He could have gone anywhere in the Commonwealth, chose to be in New York at Conrad Company Pan Air brand. I think that says something about what we're doing in the sector. We've seen a company advance some of those technologies. We probably all saw the OSIRIS-REx spacecraft come back to Earth with a piece of an asteroid. That heat shield was made in Denver, PA, at Weaver Industries. So you see us in all of the York wall coverings, a couple blocks from here. Been around since 1895. It's a company that's adapted to new fast.
Miguel, you're a short edgy.
New customer bases for over 125 plus years, and I
That's funny.
Joseph Machine Company down the street is working with Tesla. So there's a company that no one would know unless they drove in the parking lot. They exist, and yet they are a critical partner in the transition to the electronic vehicle.
I kind of bull flagging up here.
Renaissance is occurring in the country. So we have a ton of success
Yeah,
stories.
maybe some calls.
I want those to be the norm across the sector, and I think the number one place we can get there, in spite of a higher cost of capital environment, is making those
This guy calls everything, man. It's beautiful.
investments in technologies that's going to drive productivity.
Always thinks I'm
drive
bluffing.
your, companies forward in the manufacturing sector. That's really my spiel on it, because I know Tom's got a lot to talk about as well. So I'll hand it over to Tom.
Good morning, Tom Powelson. I'm Executive Director of the Manufacturers Association. We're headquartered here in New York, but we do cover what's called South Central Pennsylvania. We have about 450 members, which equates to about 100,000 employees that are part of those areas. So, as Bruce said, this region is highly diverse from an economic perspective in manufacturing, but also in a structure as well. So we have a ton of Harley-Davidsons, Hershey Foods, Johnson Controls, BAE Systems, but we also have machine shops like Billet Industries that supplies the submarine industrial base, and Tooling Dynamics, which also supplies the green energy windmill sector. So not only is it industry diverse, we don't have any dominant industry here necessarily, but we also have a lot of different sizes of companies in that supply chain. We do have some assets, though, that you may not be aware of. We were the hub of the electronic connectors industry in this region. AMP Industries from 50s.
He's trying to bluff it down every time.
Amphenol Industries, TE Connectivity.
Making all minor bluffs, and he's trying to bluff. Typically the way it is. He thinks other people are is usually exactly what he is.
That's a term we use around here, from Hanover through York, Lancaster, up into Reading, Pennsylvania. Campbell Snacks, Utz, the Hershey Company, Turkey Hill, Wolfgang Candies. It goes on and on. It's a really growth sector in this region, and it's weathered the pandemic and up and down the economy very well. So, a couple other things from a historical perspective. As I said, we're part of the association. We were born here in 1906, kind of at the early ages of the.
I'm thinking he's gonna raise. I'll just slow play him a little bit. Didn't raise. I was gonna get him all in right there.
We also were part of.
Got scared of that flush.
Factor, you'll see murals around the city about this. The York Plan, which was a plan around World War II that networked.
I'm getting dealt so many good hands.
Underlies
Crazy.
capacity amongst manufacturers, idle machines, workforce, and pooled them together to bid on defense contracts. And that became a model for the rest of the U.S. when it was fighting World War II, as far as how do we organize our industrial capacity. So incredible history here. I should also note from a growth perspective, because we like to talk about the growth side. Every year in this region, I think since the Great Recession, we
Got some calls there.
like 10,000 jobs.
Playing the breakout. It is kind of a breakout after a breakout. Does that make sense?
We're growing in GDP, as Bruce had said as well. So a lot of good things to say. A couple of the other areas I think we'll touch on more. The labor issue is significant and problematic. Pennsylvania in general is a net exporter of population, so that's a severe problem. We're not sending our youth in high school to
Queen 4? What the heck?
like our competitor states are. We have about
Hold on, had me on a bluff, huh?
students in career tech ed. Our competitor states around us have 19%.
Oh my gosh. False break.
In career tech ed, which is critical to manufacturing and being successful. A couple other areas I wanted to mention. We kind of divided it up. I know supply chain comes up quite a bit. Inflation. I think most of our companies
Did I fold?
have done well bouncing back on the supply chain issue. There are still some shortages out there. One of our companies mentioned about shortages of resin still. It's very difficult to get on a timely basis, but generally companies have adapted.
Yeah, it wasn't a good break.
Inflation is becoming a bigger and bigger problem for our manufacturers, especially our small and mid-size, which is, Bruce had said, is the vast majority of our companies. we have companies that are struggling to find working capital, affordable working capital, to make those investments. The price of automation
I'm closing out.
is such
No.
that they cannot leverage
Dang.
affordable
Oh, I playing the
resources
brakes.
to invest in that automation, so that's a critical
Might get back into it though.
Companies are also
Better pull
concerned
back.
about prices. Some of our small, mid-sized companies talked about the Fortune 500 companies coming to them with price pressure to reduce costs in an environment, as we know, that's virtually impossible to do that. So they're struggling to balance that out with their customers. So I would say generally that there's a future positivity, but one of the things I keep hearing over and over is uncertainty. And where a lot of our small, mid-sized companies are looking at uncertainty, they're not investing as much. They've definitely
No raises. Come on. Come on, pre-flopper.
skilled labor especially is still a major problem. That has trickled down into some slower hiring and slower investment for the manufacturing sector, especially in our mid-sized and small
Jeez.
companies.
Just a feeler bet.
Lots of good news for
This
South
jerk.
Central PA.
Oh my
We
gosh.
talked about compared to the state, this is a growing region overall. Healthcare, manufacturing.
Trying to act like I'm bluffing this one down a little bit.
Especially in manufacturing, we're highly diverse. There's lots of opportunity.
Oh, they've both
Lots of
folded.
investment from companies still, even at this point. Hershey is just putting in a new.
He folded. He's learning.
$1
I don't know how to keep these guys in. He had nothing.
We just
Feeler bet.
located a headquarters for bus climate control
You closed, yeah, 3 minutes ago.
in York here. So those are still happening, but there has been a significant change of uncertainty that's happening in the marketplace. I guess one of the questions would be, how long can the companies survive these constant uncertain times? So the pandemic, the war in Europe, inflation, labor strife, price pressures, all those things keep coming and coming. And I'm just concerned that our companies at some point will pull back significantly if there's not kind of a period of time where you can catch up, take a breath, maybe make those investments in automation. So I think they've done very well and are very resilient, especially in our region. But there is a point at which that kind of runs out, maybe getting to that point. So thank you for coming today. I look forward to talking more.
This is a great point for us to pause. I want to thank you all for your comments. Before we open up for questions, we're going to take a brief break and adjust our mics so that everyone can hear us. I apologize for the microphone issue. And so we're just going to stay in our seats, and then we'll open it up to questions from the chair and president.
Teresa. Are they working? Okay.
Right, we're ready to go. Okay, I think we're ready to go. Thank you for being so gracious, and thank you for your comments on economic conditions across the region. Those were extraordinarily helpful. I'm going to open it up to the chair and President Parker to see if they have any questions before we open the discussion.
So, thank you, and thank you for your, pardon me, for your comments. What's really striking about all of this to me is how important it is to have a plan, and the fact that you have had a plan and have a plan many, many smaller cities and regions in the country have had a hard time, or having a hard time, especially, frankly, those that were manufacturing based. But you have, with your plan over many years, you've really focused on manufacturing as a base to build on, and it does seem to be working. I hear you about Tom, about the challenges and the uncertainty that we're facing this time. The other thing that comes, and I think there'll be a question at the end of this, but the other thing that comes out though is we're still coming through the other side of the pandemic, right? So particularly, Kim, the comments you were making, unemployment went so
I keep
high,
taking all those guys' chips.
went down,
He's
but
giving
now
me
we're
like
left
3
with,
buy-ins.
with a very strong labor market.
Spies, come down here.
Back
We can't hear Jay, pal. Sorry, there's no other better stream that I've found. Let me know if you find one.
Very tough on the healthcare industry. A lot of workers left the healthcare industry, and I think nationally, having a very hard time to find people. So the training of new healthcare and childcare people has to be tremendously important. You mentioned, both Bruce and Tom mentioned a lot of problems around great issues to face, but manufacturing with international competition, but just also supply chain issues and inflation. So what am I going to ask you as a question? I appreciated your comments, and I wonder if it feels like your plan enabled you to come through COVID better than you otherwise would have. That you actually have a plan in place, and that's what's very striking to me. I'll just open it for reactions to that.
I think it absolutely did, Chairman. And I think the other benefit that had was we had a plan in place when funding streams like CARES and Rescue came available. So we could immediately put to good use those dollars, get them out the door quick to those who most needed it. But it really did position the community well to leverage those dollars, utilize them, strategically deploy them, and then be in position now, even a couple years later, to start seeing other funding sources come available, things like whether it has been Bloom or Fiber. It put us in position to capitalize upon them, and unquestionably it has put us in a better position today, a couple years hence, to also then, not only continue the work that we're doing, but focus on the next challenges like the housing sector or child care. So
Glad I got out of those calls,
continue
geez.
that, kind of collaborative and data rich. I don't want to necessarily punt, but I also think, Tom, the work that the manufacturing community has done now for the federal TIDE program, having these plans in place and aligning all of our community partners and resources together has now put us in position to secure a very important federal designation as well.
Yeah, and based on kind of our regional partnerships and the region having a plan and working together, we were able to secure a $6.1 million project focused on workforce for the submarine industrial base for South Central PA. We have Pennsylvania's the state with the most number of critical shipbuilders in the country. The Navy's identified it. So they focused on Pennsylvania as a way to how can we increase production of those key assets in the Navy. And they've identified Pennsylvania to do that, applied some resources, and we were able to secure some workforce dollars to help focus on more machinists, more welders, more maintenance folks. And these are folks that will be training that are new to the industry. We're not going to be retraining existing folks. We need to bring that pool together to increase the number of folks that can get into the defense sector. So we just received that, so we'll be working on that as a region, leveraging our workforce assets, our local tech schools to do that. So it's an exciting thing based on the planning that worked.
So if I could follow up on the planning, follow up with the chair, ask, what's the secret sauce, right? Why does it work here and it doesn't work other places? You don't have to criticize other places. Except maybe. My wife's family's all Steelers fans from Pittsburgh, so you can criticize them. That's it.
I want to mention the chair's affiliation with the Washington Commanders.
No, we don't.
It's a rough morning. I think it sounds cliche or cheesy, but I think it's true. It is the partners and the people in this room and so many others that are putting that plan, to work. It's very much not a plan sitting on the shelf. I mean, it really is things like CARES came available, rescue funds came available, we've been able to procure state and federal support for a variety of things. We didn't sit back and wait for those funds to dissipate or evaporate as they tend to do. Put them to good use right away. So I really do think it's the ability that we've had to align a lot of disparate parties and people and organizations really for the kind of North Star that we've been after, which is just enhancing shared widespread prosperity in this community.
Just if I can echo that, so many smaller communities have really suffered from losing aspects of their manufacturing base, and you kind of made it a centerpiece of your strategy not to let that happen. It seems to be working. I get it that there are many, many obstacles to that, but it's pretty striking that this can be really at the heart of what you're doing here.
Can I ask you to eliminate a little bit more granular and ask about the digital project that you mentioned, kind of broadband, and broadband is now kind of critical to work, critical to school. Can you talk a little bit about the gaps that exist in terms of broadband access in the region and how it's impacting the economy?
Sure. Thank you, Teresa. We're a county of 450,000 population, 900 square miles. So it's a pretty geographically large county, an hour drive, hour plus, county line to county line. In 2020, when we were doing our economic plan, CARES funding became available. We, with support of our county government, were able to do a countywide connectivity study to really lend data to anecdote, right? We know if you're driving around and you lose cell service or you're in a pocket where it doesn't necessarily have broadband, we were able to get real objective data. So there are absolutely pockets of York County and rural York County that are upwards of 70% without federally defined high-speed internet. And in York County, it's really twofold. It's infrastructure in rural parts, and it's affordability and access in urban areas. So there are pockets in our York Metro, in the city of York, or in Hanover Borough, where it's upwards of 50% don't have access to high-speed internet. So we've been trying to bridge the digital divide in York County, and again, through support with county government, through rescue and CARES funding, we've now have $27 million allocated. And in terms of a fun project that we didn't let sit on the shelf, we knew this existed. We did the county study with CARES funding, which was under a time crunch to spend. We opted to just build a middle mile network under a county asset, which is our Heritage Rail Trail. It's a 16-mile bike ped path that starts in the city and goes to the Maryland line. 40 years ago, the planners at the time buried conduit underneath it. It's a county park. It's owned by the county. We ran 16 miles of fiber underneath it, put up 2 wireless antennas, and are pushing out a free Wi-Fi signal. That was a proof of concept project that showed that we could do it and the county could own this asset. And now we're in a second phase where we're building out over 100 miles of middle mile fiber connecting parts of southern York County. So really Hanover to the Susquehanna River, Route 30 to Maryland, that the county will own, and then work with private operators to then serve as an ISP to better connect homes and businesses. That tackles the rural element of it. The urban affordability and access still exists, and in that our county government allocated $5 million to build a free basic need wireless network in the York Metro and the Hanover Metro area. That's underway, and that'll be up and running, hopefully in 2024. So it's not the type of network that a resident in the city might stream multiple devices or binge watch on Netflix. But if you need telehealth, if you need a virtual meeting, if your child needs to do virtual learning, it's a resource. And so, again, credit to having an economic plan that said this existed, doing further study to lend objectivity to anecdote, and then having resources available and having a host of partners, community organizations, and elected leaders that said, let's invest this wisely.
Thank you. Any other questions?
Yeah, Kim, I was very curious about, you talked about one side of the equation on child care. Obviously, the demand is very large. But what's driving the cost? Some of it also is availability of labor. Can you speak to that? I mean, what we hear
Spy coming down some more here.
It's hard to find child care workers.
Stuck in its chop range.
Again, for the individual families, everything is driving those costs, right? The cost for goods and services just to survive as a family is part of that. And for a family to decide what they are going to pay for, I think, are some of those things that come into play. The cost to run an operation, obviously, is everything. I'll say the regulatory parts of it, staying compliant, having enough staff, the ratio, being mindful of making sure everyone is able and trained properly as well too. So we are very happy to be part of those sort of plans because childcare, you can't have manufacturing without having a means for the children or care for them as well too. So the leadership of YCA to be inclusive with childcare is critical to this, and definitely thinking of those costs and those things that affect the family just to get by every day. We appreciate being part of the conversation and being in those studies.
I've often heard that childcare is the workforce behind the workforce, and I do think that's a true statement.
Indeed.
So thank you for those perspectives on economic conditions. If no one else has any other comments, I'm going to turn it to President Harker to move the conversation to our workforce.
Yeah, so we want to pivot to, that's what we were just talking about, workforce, and continue to talk about that. As you know, the Fed has a dual mandate, stable prices, we're working on that, and maximum employment. The way I think of that, and personally, and the chair may have a different view, but is obviously that everyone who wants a job can get a job. But then on the flip side of from the employers, everyone who wants to fill a job can find an employee, right? So it's both. It's really both. So as we think about this and the kind of programs that are necessary to fulfill that mandate, it really needs outreach. We need to bring more people off the sidelines into the economy, more people working that in jobs where they thought they probably couldn't work, right? Or they didn't have the skills to work. It's starting to get more people into the right places with the skill sets they
JPL hasn't even talked at all.
to have those
Like once?
fulfilling careers. And for the employers then to have those employees who want those fulfilling careers and have the skills. So, you know, we met with such a great person this morning, Tatiana, to my right, to talk about the program here, the hospitality training program, and how it really does meet that need of bringing people into the workforce. So I want to turn to you, Tatiana, and ask, how did you hear about it? And as you think about the program, you know, what challenges did you have in finding employment before the program? And what's happened since?
Hi, everybody. My name's Tatiana. So I heard about the John Lambert training program through a small business program that I was doing through the YCA with Kevin and Sully. And that's kind of how I started doing this small business program, and then that's when I heard about the John Lambert program, which is a program that helps you, depending on which department that you're looking to go into. It could be either housekeeping or in the kitchen or front desk. It was a program to kind of help you start that journey on what to expect, what the employer is looking for. So I ended up taking each course that they had, so housekeeping, front desk, just kind of to get all those things under my belt. And I knew it was something that I could take, you know, whether it not be here at the Yorktown, it's something that I could have under my belt or in my resume that could help me in the future as well. But I ended up doing this program, and I got my certificates for each program that they offered. And I really think that it helped me get my foot in the door. I don't think without those certificates that I got, I would have had the opportunity that I do now. So I started here due to because of the training program. I did my interviews, and I got my foot in the door. So I started here as a server in February. And I quickly worked my way up from everything. So I'm currently a manager, and I'm hoping to go into the sales and marketing department here with the hotel. And as far as any challenges, I was seeking employment, but I was kind of looking to also work for myself. That's why I got into the small business program first. So I don't know how difficult it would be to seek employment right now, but I know a few people that also applied to the hotel. They didn't make it to an interview. So I think the John Lambert program definitely helped me start my way and my journey into the hotel. I don't think that without it I would, have the opportunity that I did today.
Yeah, it's a great program. We heard earlier that the program is named after an employee who worked here at the hotel for 60 years.
Yes.
I mean, what an amazing story, right? 60 years. So what a great testament to him, his family, and to the program. So I'm going to turn to Keith. I mean, in your story at Harley.
So my name is Keith Forty.
Some expensive Hold'em we're playing.
I work with Harley Davidson. Been there just about a quarter of a century, which I find hard to believe. So about half the time they've been in New York. But I was a part of a employment readiness program as well. And what I lacked when I took a look at this motorcycle maker in the sky that was here in York is I can't be part of it. What that
This guy's
program
getting some
did
cards,
for me
man.
was give me the skills that I needed, the knowledge that I needed, and I think most importantly, the confidence. And that's confidence in that knowledge, confidence in those skills, and just straight up confidence to sit in a room and talk to a panel of people, which that was the first time I had ever done that, a 5-panel interview, and have the confidence to tell them why I would be a good fit for their organization. And without that program or that availability to strengthen the workforce and make sure that they can align with what manufacturers need, which the group over here does a great job of making sure we're aligning not only as a manufacturer, but as an employee base, as a labor pool. When we have that connection, that's where the magic happens.
So I'm going to pivot to Jesse to talk a little bit about your work and what you're hearing and seeing with respect to workforce.
Yep. Thank you for the opportunity to
shaking out
share.
my foot's right there.
We welcome you to York. We're proud of our
I just don't
community.
like it at
And
this
before I
Lowe's.
jump into the workforce, I just have to say, that's probably one of the things I'm most proud about is the collaborative nature of everyone around this room. And it truly is what makes this community so strong. We're transcending the real
Right after I
partisan
close,
fault
wow.
lines that can divide us. Eagles, Steelers, Commanders. If we can get past that, we can do anything, right? But Harley, we have amazing training programs here at Yorktown. We've got community-based organizations in higher education and the business community. We were talking with President Harker before. What are the things that if a community can transcend, we can do some really great work? And it's getting past the two barriers of who gets the money and who gets the credit. And I think this community, I've been really proud around. It's not fighting for the money or the credit. It really is truly collaborative. I think, in talking about the workforce, I think the underlying element in the dual mandate that you all have is that full employment. And it's been well documented that one of the biggest barriers that we're facing right now, one of the key issues that most businesses are facing, both here in South Central Pennsylvania and across the country, is a lack of workforce, right? So as the CEO of the Workforce Development Board that serves an 8-county region here, which includes York, but also 7 other counties, it is our goal to invest in, evaluate, and advance high-impact workforce programs that drive economic mobility. We envision that this region can be a place where the opportunity for prosperity and growth exists for all people, both for job seekers and businesses. And so part of what we do as a workforce board is we're looking at those individuals who are on the sidelines, right? So let's carry the NFL metaphor a little bit, right? It's somebody who is not in the labor force. They're on the sidelines, they got their helmet, their pads ready to go, and they want to get into the game. So the Workforce Development Board, our mandate is to get those individuals the skills, knowledge, training, and education to get into the workforce to be productive members of our growing economic community. So what are some of the barriers that we see? As it's been well documented, the demographic droughts are difficult to reverse. An aging population across the country, low birth rates. Quick anecdote. This is my first day back from paternity leave. We just welcomed our fourth child a couple weeks ago. So we are doing our best to keep those birth rates as high as we possibly can. But it's going to take more than one family, right? So these are structural problems that are going to be challenging for us to navigate. So in a world in which there are structural limitations to the size of the workforce, that really is not to borrow the term, but it's lower for longer in terms of the number of people in the workforce. How do we make that workforce more productive? And so the biggest barriers that we see is that really this should be a golden age for workers. When we consider that there are often more jobs available than there are available workforce, we're seeing that with rising wage pressure. This should be a golden age for workers. And so what is motivating workers, both here in New York and across the state and the country, is really pay, pathways, and purpose. And I would probably add a fourth one in there, the ability to pivot. So pay. What are the wages and what are the opportunity occupations, such as manufacturing and healthcare, that will be able to support my family, right? That family-sustaining wages.
Looking
so
for a
we
bounce,
use a
get
lot
back
of
in
that
those puds.
family-sustaining wage in MIT's
I
living
can't
wage
believe.
data to say, are these opportunity occupations that will really help workers find pay? Pathways. For some of our higher education folks, if we have a college graduate coming up in May, what's the likelihood that that recent college graduate will need no more training, education, or professional development over the next 40 years of their career, right? Zero, right? So we need the opportunity to build really strong pathways. One thing that includes is the agility.
I think we're kind of getting out of the chop with this move.
As there are changes in the
Got
labor
the
market. I was
volume,
thinking about Bruce
the
and
break
Tom
of the low of the day.
comments about manufacturing, 4.0 industry. How much will manufacturing
Like
change
the
over the next
downside.
5, 10, 15 years with AI, automation, robotics? We need the pathways with our higher education and post-secondary partners to be able to build the agility into those pathways. And then purpose, right? Workers want to be a part of something bigger than to just be a cog in the wheel, right? I think about Harley and the incredible impact it's had on the community. So pay, pathways, purpose, and then that ability to pivot, right? To be able over the next 40 years to get the skills, knowledge, and ability to adapt with the changing times. Two other real quick comments here is one of the things that we see is that, and we've noticed this, a barrier with workforce development, is that there's this unfortunate dichotomy of either college or career, right? And we see this with higher education, I'm sure, seen this significantly, but even in parents and guardians, this idea of my kid's going to college and that's the only pathway, right? It was 13th grade for me. That was just the next logical step. That I didn't know there were other options. But I would like to say that if we as a community can look at that instead of college or career, it's college and, right? The ability to source a skilled talent workforce both through bachelor's degrees and in what we would call skilled through alternative routes, or STARS. And this is an acronym that Opportunity at Work, which is a great organization, has really piloted. The skilled through alternative routes, apprenticeships, on-the-job training, co-op programs, career and technical education. There are many ways that we need to build a skilled workforce in alternative routes from bachelor's degrees. I'm the beneficiary of a bachelor's degree. I think many of us here are in this room. But in order for us to solve the underlying problem of not enough workers, we need to source this through alternative routes. Last thing I would say is we have some great industry partnership programs here. Tom and I have been working together for 7 or 8 years on a number of industry partnership programs, grant funded through the state, where we put employers at the center of the table, so to speak, and let employers drive the conversation around what they need, what's valuable, and what the skills, knowledge, and training is really valued in the market today. Then the economic development, workforce development boards, and higher education respond with that demand-driven approach. And I think that's a real best practice that we've done a great job of here in this region, and I think it's replicable across the country to put employers at the center instead of the train and hope that those graduates can perform in the market. It's putting those employers at the table and saying, this is where we need to invest. So there's a lot there. I'm really excited, and I love your optimism, Bruce, about this region. My wife and I are transplants here. We moved here 12 years ago. We're just up north the road on 83 a little bit. This is home. This is a great place to live. It's a great place to work. It's a great place to raise a family. Great institutions, great businesses, low cost of living. So the story of South Central Pennsylvania, I think, will be a lot of the story of American growth. We love Philly and Pittsburgh, but what's happening here is really exciting. Yeah, absolutely. So at this point, speaking of higher education and our friends at Harley, Demetra, David, and Tom are going to talk a little bit about some of the ecosystem that we've built here, a great group of partners, including our business community, that's so instrumental in driving this conversation.
Hello, Demetra Middleton. I'm Harley Davidson, York Final Vehicle Operations Plant. We actually just celebrated 50 years here in York. And so again, excited to be at the table and have these partnerships with the various organizations here. I just moved here in 2019, so I'm not originally from York, but I found that York is a great place to live, work, and play, and a lot of it was that initial connection we made with York County Economic Alliance Council. So a few things that we've been able to partner with them for example, the job fairs. We've participated in several of our job fairs at the York Revolution Stadium. We've been able to communicate that, again, Harley-Davidson, it's a brand name that everyone knows. We make the world's most desirable motorcycles. Everyone wants one, right? But a lot of people don't realize that some things we've done to respond to the market is you only have to have a high school diploma or GED or 1 year work experience anywhere. We will train you as a production technician employee. We have a 3-shift operation. We run pretty much 24 hours. We're a union shop, so we have a lot of great opportunities, and through partnerships, we've been able to share those opportunities. With us not being the only manufacturer, as we said here, and a lot of competition, we found that working together, not only with the Manufacturing Association, Mantech, the local colleges, but also the Penn Airs, the bus climate control, RHI Magnesita, we found that we all need the same thing. So how can we work together and be collaborative in offering those opportunities to our employees? At Harley, we found that a lot of us needed welders, for example, in this organization. So we've been able to partner with the Manufacturing Association, with York County School of Technology for the past 4 years. We've been sending our internal employees for free training because of that to be welders, and that's been a successful internal career development program for us. We've also been partnering with the Manufacturing Association on our maintenance apprenticeship program. That is another topic when we get together in a lot of our conversations with the manufacturers. We're all looking for these same skill sets. So we've been able to work together to move forward with that. I know when you were mentioning about college isn't the only option. I laugh all the time because my father worked 30 years in manufacturing, retired from there, but college was the only opportunity he ever discussed with me. So once I got into manufacturing, I was like, Dad, you never told me manufacturing is a great career. It's something that I want to make sure that I share. So with my children, I was able to say, hey, this child, college was a fit, but this child, it wasn't. So we were able to talk through, and because of the partnerships I had, he was able to get his HVAC certification through the York County School of Technology Adult Education Program. So again, we have all of these great partnerships and opportunity. Another thing that with the Welcoming Workplace Initiative, that a lot of us were able to come together as partners to bring together conversations where you have these various organizations where we can talk about how York is a great place to work, live, and play. And it has become a consortium of conversation where you can get more information about making sure that your workplace is inclusive, there is belonging, and you have those other organizations that you can learn from. At Harley-Davidson, it's a part of our strategy that inclusive stakeholder management, it's who we are. But I'm still able to talk to a Penn Air, to Bus Climate Control, RHI Magnesita, to find out what are they offering. And businesses of all sizes have that opportunity where we can collaborate through the Welcoming Workplace Initiative. Some of the barriers I'll just add that, again, has been a great partnership for us. Partnering with York County Economic Alliance, we currently have a child care program that we're doing, and I work closely with the YWCA as well. And so that has been a challenge. I know WellSpan has the same challenges when you have a 3-shift operation. 3rd shift childcare is a big thing. And so we've been able to work together to try to figure out, okay, what can we find out what York needs as a community, and how can we work together to support it, because Harley-Davidson is a big name, but we can't do it by ourselves. So we need those partnerships. Same thing with transportation. That's another big one for us. We've been able to work to talk about what are some transportation options for our employees in the workforce.
Chairman Powell, President Harker, thanks for being with us. My name is Thomas Burns. I'm the president of York College of Pennsylvania, and I'm the newbie around the table. I just finished my 3rd month here, and so part of my role is to say that I'm here because York is a place where I felt I could thrive, and it's a community that's built on collaboration and cooperation. Everyone around this table has a connection to York College, and York College has a connection to everyone around this table. And it's lovely to be at a place that is interdependent and collaborative and cooperative. As Demetria said, part of what we all need to work on is the idea of attracting and retaining talent. And part of the higher education, portfolio that David and I work in is really helping to attract people into our community, helping train them, and helping them stay here. So for the college, it starts with a program called YCOSP. It focuses on students who are at William Penn High School, which is here in New York City, and is an opportunity for, regardless of financial circumstances, chance for students to come to college with all their expenses covered. And it is meant to give them an opportunity to engage in higher education, if that's what they want to do, to change their potential and opportunities here in York, but also to change the pathway their families are on. And so it's a wonderful opportunity to bring people in and help them find their place and their purpose, and then help them develop
nice little flush there, new low.
Opportunities that will make this a richer workforce area.
Nice little head and shoulders
We're
to
also
set up.
engaged in working with the community to help identify data sources that can help the community make good decisions. So we have a Master's in Public Policy Administration started recently because we recognized that the community itself had lots of data and lots of information, but didn't have a place to collect it and to gather it and to use it to make good decisions. And so part of our role as being sort of a politically agnostic entity is to help bring that data together and provide it to the decision makers so they can use it to make good decisions about their future. Of course, we're really interested in job placement and job development for our students, and so we spend a fair amount of time focusing on real practical, hands-on education at York College. So we're heavily invested in internships and co-ops and study abroad, and an opportunity that the Yorktown, where we are all meeting, has provided us as a community hotel was an opportunity for our students during the development, the construction, and really the operation of this entity is to bring our students into those conversations and have them sit with the people who do the work and do the business, learn alongside them, and then ultimately see this as a career opportunity for them. And so we have many graduates recently who have come on to work at the Yorktown as part of that process. Right outside these windows, you can look across the street and see the Gunter Smith Center for Community Engagement, named after my predecessor. But we put in the center of the city a location that brings together community organizations, nonprofits, provides training and conversation partners to help make sure that as a community we are discussing the important topics that matter to all of our success. And so these are conversations around group violence intervention and other opportunities where we can bring the shareholders, the stakeholders together, talk about the issue, and then develop solutions together, because together we're going to do this well. If we do it as a separate entity, it doesn't work. And so you've heard that around this table all morning. And then last but not least for us is the importance of taking the concept of career and professional development into the development of opportunities. So the J.D. Brown Center for Entrepreneurship is our incubator for new entities who want to establish new businesses in the York County area, but then it transcends itself into a place that we've developed called the Knowledge Park. So the Knowledge Park is sort of the next step for those incubated companies where we've built a facility right next to the college where we bring in our business partners who want to work with the college faculty and college students and college staff to help create and develop new ideas that then can either form new companies, new jobs, new opportunities, but it serves as a second stage incubator. Our partners at WellSpan are also developing a production facility. They're a well-established company, but they need more space. So we can provide that space, but also an opportunity to collaborate with our scientists, our engineers, our communication specialists to develop training and opportunities for their faculty and their staff. And so what we see ourselves, David and I, are as places that can incubate, attract, retain, and develop new ideas. And I think David's going to spend a little time talking about the Launchbox program that Penn State York developed.
Thank you, Thomas. My name is David Christensen. I'm the Chancellor at Penn State York, and I welcome you here to the York community, Thomas. I look forward to working with you as a partner. Penn State University was founded in 1855, and in 1863 it took on a mission of being a land-grant university. What essentially that boils down to is it accepted the responsibility of driving economic prosperity. Historically, that has taken the form of students in classes, preparing a workforce for the future, but a profound change took place about 9 years ago when a previous president, Eric Barron, created the mission of the Launch Box at Penn State University. The Launch Box is the notion that we bring our expertise outside of our university community and into the surrounding community.
Nice, Guts. Well done, man.
To engage with individuals who were not Penn State students. So
Yeah,
he
I
was
had
very
puts
interested in
here.
tech transfer.
Stopped. I
It
then stopped. I
started,
closed
first
out of
of
them.
all, at
Got back
University
in here on the
Park,
side and
but
shoulders.
extended to all of the 20 Commonwealth campuses. We were the last campus of the 20 to get a launch
I think
box
we're out of the
here
chop
in
though,
York.
so
That
that's
was just 2 years ago during COVID. So each of the
that's why I'm
launch
thinking more
boxes
continuation of the
adapts to
downside
the
now.
local needs of its community. So for
Breaking through
instance,
this
in
support
Erie,
here
there's
is
a
pretty big,
focus on
pretty big level.
manufacturing, and so advanced
Next
manufacturing
425
is the
even,
focus
and
of
then
their launch box.
the lows of
Here,
last week.
there was a rich ecosystem of entrepreneurial resources already. We felt the area that was most underserved was early stage entrepreneurship. So working with individuals on proof of concept, developing prototypes of products, proof of relevance, customer discovery, minimum viable products, and so on. This was before the Bloom Business Empowerment Center started, and it is a very similar mission, and we look forward to working with partners just like that. Oftentimes we find individuals who are at a different stage of their entrepreneurial development, and we'll send them to the different resources in the area. One example that I could give you of work that has been done was, incidentally, a Penn State York business student, an individual who wanted to create a bisexual dating app. There was Grindr, there was Tinder for other communities, but there was nothing for bisexual dating. So she came up with the idea of Binder, B-I-N-D-R. And you can actually download it right now if you want to. She came up with the idea. She worked with our Launchbox community, a couple faculty members who shared their expertise. We connected her with a local IT individual, and now they've created this app, and it's doing very well.
Should have taken some profits down there, I guess.
So the Penn State York Launchbox is great. We are part of this, this community of Launchboxes throughout Penn State, throughout the community. We're a portal to other resources throughout the university. Now, you might be familiar with the Brookings Institute study a couple of years ago looking at technology transfer within Pennsylvania. And they looked at the universities, they looked at the ratio of research expenditures and patents, and Penn State University was not performing very well. We do have $1 billion annually in research expenditures, but about 95% of that is located in a rural county in the middle of Pennsylvania, far from Pittsburgh,
We'll chop
far
even down
from
here after this.
Philadelphia.
Flush
It's
through
felt
support.
that we can be using the launch boxes as this connection to the greater university resources. The challenges we have is making that connections because the launch box initiative, something new.
It wasn't that big of a move at all, Guts.
We don't have the expertise.
I mean, I don't know. I guess if you got them right at
But we
Powell,
need to figure out a way to make this system work.
it's a pretty nice move, but today's been very,
So,
very tight range.
Finally, I'd like to also mention that in addition to the launch box, we do focus on developing skills within our own students outside of the professional, or excuse me, the academic skills you get within a major. We focus on helping students get ready for the professional workplace through training on innovative thinking, resilience, emotional intelligence, and so on. So we're very proud of these innovative programs, and frankly, I think this is one of the ways that Penn State York does contribute most to the greater York community.
Thank you so much for that. This is a really great conversation on workforce and education. I ask the chair and President Harper if you have any questions of the various workforce stakeholders.
Once again, I find myself wanting to comment, so this is, it's really, the word that comes to mind is mindful, how mindful all of this is, you know, the focus on developing people and developing opportunities for them. Jesse, you pointed out that should be a great time to be an employee here. We have 1.5 job openings for every unemployed person. We have what appears to be a structural labor shortage and lots of opportunity. So our main part in all of this is what we all desire at the Fed is a sustained period of strong labor market have the record is clear, a long period of sustained labor market conditions. Lots of good things happen. You get real wage increases. You also get things like broadly over the country, people are looking to find more people and getting them into the labor market, including visiting prisons and starting to work with people a year before they get out. So, and actually it turns out that as an expansion gets longer and longer, more and more of the wage gains actually go to people at the lower end of the wage spectrum. So these are really beneficial things. To have that, though, the record is also clear that we need price stability. Price stability is just a critical piece of bedrock for the overall economy over the years. So, and that's why we're very focused on restoring price stability and then having it over a long period. But again, this is a great time, and many of the programs that we also hear wherever you go in the country, and where there are entrepreneurship programs, and what you characterized as what was the program? You had a nice description of that would enable you to work. Employee readiness program. Yeah, those really do seem to work and pay off, and this is a message that obviously it seems you and York have gotten long ago, and so it's very encouraging.
Yeah, I would just add to that I think about the collaboration you have.
Nice, Bubba.
You wonder.
Hard to.
It's very difficult for very large cities to do this.
Realize losers, but good.
Kind of a sweet spot. Have I seen that right?
Yes.
It's unusual. I mean, you're just about the right size, right? You're that.
You feel a little inverse head and shoulders down here.
In the story, but it's just about the right size where you know each other. You can work together. Whereas in larger urban areas, it's a little tough.
It is 12:15. Into the chop hours.
Yeah, how do you break down that view that these are not jobs I want my child to have?
Yeah, that's a great question too. Just to answer that real quickly, so and this is anecdotal, but I think over the past 10 or 15 years, we've seen a market change. That pendulum was swinging to four-year degree and or bust. And I think it has to some degree, and I'm looking out there for some confirmation, that I think it's come back to at least a little bit of a stasis around there are other ways. I still think that the sensibilities and the dichotomy, I think, of parents who want four-year degrees is still a hard thing to break. With regards to job seekers across York City and York County, I think it really does take a productive network of businesses and community-based organizations, economic development and workforce development boards.
There's a trade another day, exactly.
Out in the community. So, for instance, the workforce development boards are authorized under the Workforce Investment and Opportunity Act to run American Job Centers. Historically, we have just had American Job Centers in one building and say, job seekers come to us. For the past couple of years, I think it was motivated a lot by the pandemic. It's let's build community access points in 24 or so places across York City, in rural areas, and let's go to where the job seekers are. And one thing I'll say is that when we talk about those that are on the sidelines, another demographic that we keep our eye on is the ALICE population, right? The asset-limited, income-constrained, the employed. Well, if those individuals are working, they probably aren't going to come to our American Job Center during 9 to 5. So we need to, it's prohibitive for us to say, just come to us 9 to 5 in this building. We need to be out and build community access points at health centers. We need to be doing on-the-job training at manufacturing facilities. We need to be doing English as second language workshops and courses on business premises. So we need to be out in the community more to make sure that we're serving that ALICE demographic and those that are on the sidelines. So I think to that point, we can't just sit in one place and hope people come to us. It needs to be out in the community.
So last area we want to pivot to, I want to be cognizant of the time, is really around access to capital. This came up in a couple of places, access to capital. The Fed,
If we catch up on this channel for some support.
Through our 2021 Rock Cohort program in working on this issue. And I know
opportunity. And as you mentioned, really, we are so thankful for the relationship with the Federal Reserve banks and the opportunity to be part of the Reinventing Our Communities initiative in 2021, focused on small business recovery. And we were so amazed, and we took so much from that program that we applied again in 2022 on the workforce initiatives. So we're going for the punch card effect. So hopefully the next one will be continuing the relationship. Okay, thank you. Thank you. But really the opportunity to be part of that program and connect with communities across the country that are similar in size, similar challenges, really be able to share some of those best practices and establish the relationships where
We had nothing.
really the sense of camaraderie, and as we're all
He
talking about
re-raised?
today,
What the heck?
collaboration.
He's trying to bluff.
It's not just in York, it's not just in Central
Re-bluff.
Pennsylvania, but across our country, and really
Bluff on a
supporting
bluff.
to drive that economic change. So through the ROC cohort in 2021, which coincided with the implementation
What's Powell
of our
doing there?
county's economic action plan,
Just listening?
great data in front of us that showed that York County lagged the business birth rate when it came to women, individuals of color, and our other underserved populations. So looking at the opportunities to come from that, of where can we really put our resources, continue that collaboration, not just on workforce, not just on housing or childcare, but again on the sense of entrepreneurship, because many of our entrepreneurs, many in this group that you'll get to hear from, all have a sense of passion and desire to help their communities. So how can we empower them? Through our Bloom Business Empowerment Center, where we've been able to offer, we launched officially in February of last year, and through that have been able to offer free educational for entrepreneurs in English and Spanish at a local community center, Christmas Attics that we shared earlier, where we connected with Tatiana, who then was able to take the Johnny Lambert hospitality training courses and really help that be an opportunity to grow the awareness in the community. Through that, we've also been able to award, be a source for capital when we're looking at emergency needs that a business may have. Whether it's not enough to go and pursue capital by way of a loan, but where's that emergency fund? So through the classes, we're helping entrepreneurs be financially ready to pursue that step into entrepreneurship and plan, but also support them through our Bloom grants, which are micro grants to support emergency needs, marketing projects, and for any other larger needs. We are incredibly thankful to be able to partner with the state and deploy their SSBCI funds, as well as our own Bloom funds to provide our loans, which are available starting at 4.5% to entrepreneurs that are startup or that are existing, looking to scale in a variety of amount ranges, and really being that resource where the entrepreneurs are part of that process. We are providing the education, we are providing all of the information up front so they know what they are getting into, but also know that Bloom is not just a resource when they are in need of some other opportunity. Certainly through the pandemic, we learned when we were able to deploy nearly $30 million in COVID relief funding to entrepreneurs and nonprofits that we didn't just want to be a reactive resource. We wanted to continue that relationship and continue to empower our entrepreneurs. So we're incredibly thankful to be working towards our CDFI designation in the future. And speaking of the great entrepreneurs here in the room, I would love to turn it over to Michelle from Lux in Maine, and then Sandy from Fat Pat Brewing to share about some of their experiences through Bloom and also their incredible journeys as entrepreneurs.
Hello, everyone. Thank you for having me. I am Michelle Wright from Lux in Maine. Sorry about that. I am Michelle Wright from Lux in Maine. I have been in business now for 8 years. I just celebrated yesterday. Yesterday, October 1st, made 8 years being in business. Being a business owner in York is definitely taught me so much, especially back in 2020 when everything was closed. I had to close my business due to the pandemic like everyone else. But also during that time, a month after we were closed, I endured a fire at the building. So I also had to pivot through those things, and that was very challenging for me. So going without, going from a 2-income household to now a 1-income household was definitely a struggle. but through that, we have definitely made it, we've overcome. And I think I could speak for every entrepreneur out here that, you know, it's not about where we are, but where we're going, and just the tenacity that we have to keep going in spite of the challenges that are ahead of us or that we face today. And with that, you know, I decided to do a ribbon cutting when I reopened my business, and Bloom in Downtown Inc. has been just a great resource for me and my business. It has opened up many doors and opportunities for me. I have been able to
Spy climbing up here a little bit.
be at a platform such as this today, and, you know, other things that I have had the privilege and honor of speaking with other people, like entrepreneurs such as myself. I do believe that working capital is very important for entrepreneurs just like me, because it helps us to be able to create jobs and opportunity for people and businesses, and also being able to survive, you know, and being able to continue to have like products and that nature. Just recently, I had a client call me and tell me that unfortunately, because she normally comes every 2 weeks, that she will no longer be able to come as often as she could because of inflation and prices and different things like that. So it's been a challenge for her to be able to do her upkeep and her maintenance of her personal care that she normally would do. So a lot of people are definitely facing some challenges in this moment, but I do believe that at some point we'll be able to get
And right
this,
back down.
It'll be better on the other side of this.
So like this inverse head and shoulders down here.
Training, like I said, with Bloom, they have helped me as far as education. They've helped me, and Suli has been a tremendous asset to my business and just helping me to propel, and even being able to do speaking, like
If it'll hold with this sell-off.
be speaking, you know, with a large audience such as this, but I am truly grateful for the opportunity, and I do plan to expand my business at some point. You know, right now I am in a small space, and it is me and another person, but I would love to be able to offer a different variety of services, such as spotlight services. I mean, I have the vision, I have the
What? Slow play the 10s?
I have the business
Hold on.
plan, thank you. But just being able to have access to capital would really, really help me to be able to propel my business to the next level. So I would love
Guess it'll bounce the channel.
that at some point. Right now, I've kind of put a pause on it with everything that's going on. But at some point, I know that we'll be able to do so.
Thank you, Michelle.
Yes, thank you.
Two mics to choose from.
Hi, I'm Sandy Bile. I'm the owner of That Brewing Company over in Hanover, so we're in the York County area. Challenges to opening. I would say COVID was a big challenge. I mean, opening is difficult anyway, but COVID really threw us a curveball. I planned to open March of 2020. That did not happen. We opened 15 months later. I already had full-time employees.
Crazy.
All of that. I ended up having to shift some funds that I was going to have contractors do things. I had them do different things. So there's a lot of, like you said, pivoting that had to go on. But things have been great since then. I would say this year is a challenge with the continuing, I'd say the lingering effects of COVID. So we have inflation, we have expenses, shipping has at least doubled. All of my supplies, because of shipping probably, have increased in price. So it's difficult. I'm trying to maintain prices because craft beer is expensive compared to other beer. But, you know, this is the challenge that we're facing. Right now, another thing that's really affecting me is the cost of money. You know, I have
Just straight.
credit. I have a credit card. Those things.
Check it down.
Pretty
Yeah,
regularly,
dang it.
about every 2 months, that my interest rate is going up again.
Hoping to land it.
And that's been going on for over a year now. So that makes it difficult, but I had plans to expand as well. At the end of last year, I was really looking into locations for a second tap room. But I really pulled back those plans and just hunkering down and sticking with this location and trying to build the business there. I do still plan on looking for another opportunity in the future. future, but just not right now. I did get some help from the Bloom grants. That was very helpful.
This
It
chop.
allowed me to increase my customer base. Hanover is looking to be a
12:30.
trail town, and we are very near where the trail will come into Hanover. So I had, as part of the grant money, I used it to get a bike repair station because we have a lot of bikers that use the trails, and it's right behind our building. It's very it's attractive, and we have it on Google Maps, so you can see where it is, and we have a lot of use. Even without the trail connected yet, we have a lot of people using it, which is really nice. And I also used it to get a stair lift. We have a rental space below our tap room, and there was a half a flight of stairs that handicapped or elderly people could not get down. So we got a stair lift, which is great. Now just one person can help people go down the steps, and it's worked out very nicely. But yeah, I'm glad that all the support is here in your county, and looking forward to the future. Because after the inflation and the rough times, then the good times come, right? That's what we're waiting for.
I know we're out of time, Mr. Powell. If there are any questions about small business participants, we don't need to really have to close this out with some questions.
Thank you for another round of really inspiring comments.
Yeah, and I'll just, I know we're at time, and I know you got to get back running businesses and figuring out workforce solutions and child care. Really, I just appreciate you taking all the time.
Gee, Pow Pow, take us to the moon.
It's really interesting. I mean, I've been
Do
thinking
it.
about, there's a lot of things to think about. I know the chair shares that view. And so on behalf of the Fed, just thank you for taking the time to be with us.
Is that it? Over? Why don't you fix some mics on this recess? Put a line into your camera. Straight. It's chicken or straights, man. Let her see a river, she'll lay in the straight. Yeah, I think that's it. Just for J-Pow to listen. That was hilarious.
So I think that the advancements that are happening at the direct-to-consumer level,
Market probably got a little reaction, some in there.
other large companies like that going direct-to-consumer has,
But yeah, not really anything because J-Pow didn't
Amazon
talk.
less of a force. Is still the massive force and the dominant force in the industry, but also, for one-off shops like that are using Shopify and other places like that, we're just starting to see a nice democratization, a nice distribution of companies, whether they're small or large, able to go direct to the consumer. And I think for all of those companies, outside of Amazon's purview, it's FedEx or it's UPS. And actually, I think the one dark horse
Card dead on this table.
into this conversation is Uber. I think from a long-term perspective,
There goes
Uber's
Spy.
got that local logistics down so well that I think that they could be the real dark horse that kind of comes from out of nowhere and steals some market share in the future. But for now, it's a FedEx UPS game, and Amazon's going to do their thing. But I think overall, I agree with you. FedEx in good shape, increasing margins, getting more efficient during this kind of tough macro time.
Yeah, and I think it's going to be key going into the holiday shopping season, how much people are going to actually buy. They're constrained by inflationary pressures. But I got a chart of UPS versus FedEx here, Andy, and it's at the widest level that it's been in years where UPS is lagging FedEx. But if you look at your mentions chart, it seems like the stock price on that one specific graphic, yeah, there's the FedEx UPS, pretty wide gap here at this point. It doesn't seem like your mentions count where the stock is kind of correlates that maybe this stock is maybe in uncharted territory or maybe a little bit overbought.
Yeah, you know, the mentions volume at Likefolio did a really good job of predicting the latest surge in FedEx stock price, and we're kind of in a wait and see pattern. I wouldn't say that we're due for a pullback necessarily. I think we really have to see what happens over this very critical next 3-month period. You know, we're kind of ending the off season, if you will, for these delivery giants, and so I really want to see what the data looks like as we move forward into October and especially November and December. Who captures that holiday shipping, especially e-commerce?
That two pair really screwed this guy with his pocket fours.
Who's the winner in 2024? But so far, you know, I think we've done a good job of saying FedEx is the winner over UPS for the first time.
I was like, how did I win that? Just with the kicker.
So
It sucks.
have to continue sticking with that trend until the data points the other way.
All right, great stuff. Great data. As always, Andy, appreciate it.
Thank you.
All right, that's Andy Swan, co-founder at Likefolio, breaking down the data for us on this. FedEx, you know, it's severely outperformed. I mean, like I said, just over a year ago, this data and the stock movements were flip-flopped completely because FedEx had a couple of rough quarters
Stable
before
plays the
they started
opposite.
cutting expenses.
Right.
Yeah, but how do you want to look at this from an example trade?
Hold that channel.
FedEx
Oh,
has
it's not
done
looking
a great
good.
job of getting their margins up to 12 to 13%, very close to UPS because of these cost reductions. Now, that's a great way to make your whole company look better, but I'd rather it be volumes, Tom, right? I'd rather be doing both. It doesn't. I don't know if they're doing both. It just looks like it's coming from the cost. So, yeah, you're right, though. This stock has had an unbelievable run. It's up now over the 50-day moving average, Tom. So here's an idea. It's not a recommendation. It's a paper money trade. It doesn't mean anything. But if you wanted to look at a run in a stock like it's had, look at the environment we find ourselves with interest rates and the dollar and all this, and potential competition from Amazon, like I said, and Uber, which Andy brought up, which is a great point, that Uber could be a competition. One way to do that would be put on a bearish play, but put on a play where if nothing happens and the stock just consolidates, you're still profitable, Tom. So here's what I looked at. I went out to November 3rd, so right around a month from where we are now, Tom, and I sold the 275, 285 call spread. Now that is higher than, you know, the year high in this stock. It's at a safe level above where the market's trading right now. Then I use that credit to finance a long put vertical. Same expiration, the 255, 250 put vertical. Tom, right now I did that whole basket. I put in $1.30. I think it's trading about $1.20 now. Tom, but this is a way, because you do the total package for $1.20 credit, that this is a bearish play. Make no mistake, it's 24 delta short. But because you're doing it for a credit, because you've got a call vertical above the market, if the stock stays right here, you take advantage of the call vertical and you're profitable. If you get the down move towards $55 or $50, you could be profitable on both spreads, Tom. It's a complex trade.
Didn't close those calls at the right time, but
one short, one long vertical.
Yep, let's break this one down. November 3rd weekly series. I'm not sure if we have the graphic on this yet, but I'll
it's
walk
midday
you
chat.
through it.
There isn't
Here.
data.
Oh, there we go. Perfect. November 3rd weekly, so 32 days till expiration. Selling a call vertical, $10 wide, selling the 275 call, buying the 285 call. You're collecting a credit on that. And then that's helping to finance the purchase of the 255 strike put,
back up to
selling
VWAP.
the 250 put. So you're buying
Down
a put
almost
vertical.
6%.
That's bearish. All for about a
AMC
$1.25
climbing,
credit we got up here.
barbecued,
That takes your
canceled.
risk above 285, Kevin. That's the upside of that short call vertical. You've got risk of about $875 per customized four-legged spread here, and that's the difference, the $10 width of the vertical minus the credit that you collect, $125, so $875 in risk. But then between 275 and 255, Kev, you're going to just get to keep that credit that you collected. You can see there kind of flattens out. So you've still got some room to the upside where you could be wrong and still profitable on this. And then anything below the 250 strike is where you get your max profitability at about $625 if it goes below that 250 level at expiration on that. You got some assignment risk on that short 275 strike call. On this one also, if it goes up there and above it, you've got some risk on assignment into expiration over the next 32 days. But a good look at a different type of strategy where you're selling a neutral to bullish, neutral to bearish call vertical to help finance the purchase of a bearish put vertical, where even if it stays right here, you're going to be profitable. You just don't want it to go above that break even, which is 276.25. That's where your break even is on that, where you start losing money on it. But then again, that's over $10 above the current share price, so you've got some room there. All right, that's going to do it for this segment. Good look at that example trade. But when we come back, we're going to take a look at Datadog. Stock's having a decent year this year, got upgraded today. We're coming right back here with Fast Market.
It's coming down a little more here, breaking to the downside of that channel. I got back into some puts there. It's midday though, dang it.
Nice little upgrade today out of Piper Sandler. What's your take here on Datadog?
Good. There's a few things going on with the company. I mean, you got a couple upgrades. Piper Sandler increases their price target to 115, and UBS also initiated coverage on the company with a $100 price target. I think if you look at Datadog, which is essentially a very pronounced company from the standpoint of growth, and of course data analytics, they've actually been growing their platform as a service-based business, which basically helps IT managers and developers monitor their applications and, of course, make adjustments and modify their applications on a remote basis. So there's an observable cloud element to Datadog's business, not to mention, of course, the secular trends that are going on with artificial intelligence. But interesting enough, if you look at the stock, there was a huge gap in the chart. This goes back to August. I went and looked at the report. If I remember correctly, they actually beat the earnings and sales estimates. Net revenue retention rates were over 120%. It gives you an idea that they're getting more money out of existing customers. New customer growth actually was higher by about 30%, with sales over 40% over the last year. But one of the things that caused the stock to fall about 20% was they actually gave guidance for Q3's revenues, which were slightly lower than Wall Street estimates. And I think now, considering the stock has actually hit the $85 area, which was actually the low back on the earnings day back on the 8th of August, is starting to look interesting, I think, from a technical standpoint. And maybe the guidance that the company provided was a little bit low relative to the estimates.
New low in the day. There's your flush.
Maybe this is why the analysts are upping the stock.
Yeah, George, that was a big gap on their earnings day because they basically came out and lowered their full year guidance. And they talked about, maybe some problems going forward, but the end game, the end market for this product is going to be there. They're going to have demand. They don't
Next
have,
level's 422.29.
they have a monstrous negative PE, so they're not exactly profitable yet consistently. But George, this company has recovered a little bit from that big gap down there on their earnings. They've got earnings coming up here. Well, I mean, do we trust this yet, George? Is it safe to get in this?
Well, I can't say if it's safe. I will say this, that, there are times when you see, of course, gaps to the downside and a continuation. I think last week's retest of the low level 85 from a technical standpoint looks interesting, because if you also look at that level from a technical standpoint now, there's a confluence. There's the 200 period moving average, which is still rising, and it actually hit that level back last Thursday.
Put a stop on the rest to break even.
So that, may be a technical support area. The other thing is,
maybe third string account will save 1 and 2 today.
Absent the fact that, yes, they did cut the guidance for fiscal year 23. That's why the stock went down 20%. But nonetheless, the sales growth estimates for the full year next year are still 35%, with EBITDA at 48%. Now, if you look at the forward multiple at around 65 times earnings, that's about 1.5 times EBITDA growth, which one would say, looking at a PEG ratio of 1.5 would be considered fair value. So, lofty PE ratios on an absolute basis, yes, but the company's been growing pretty tremendously. And I think, looking at last couple of weeks with the announcement of Splunk being acquired by Cisco, now that they're not exactly the same kinds of businesses, but I think if you look at the observability features of Datadog's technologies, that's in line with companies like Splunk. So maybe, based upon that acquisition, the multiple may be justified to trade at these levels. I can't say for sure, but nonetheless, I think the chart looks interesting, because it is maybe a double bottom, hitting that 200-day moving average, again, hitting those lows from the August 8 report.
Yeah, still not profitable on a gap basis at this point.
Correct.
And they're struggling, George, with those the competition from Cisco's App Dynamics and then also New Relic.
Yep.
They're not gaining those $100,000 a year in annual recurring revenue from those bigger clients, because enterprise spend's been coming down a little bit. So maybe some headwinds there. All right, great stuff, George. As always, appreciate it. That's George Tillis breaking down Datadog after the Piper Sandler upgrade to 115 from 88, put a buy rate or an overweight rating from neutral. Kev, so I looked at this one where I want to avoid that earnings because last quarter, as you guys both mentioned, this stock fell from 106. It closed at 106 the day before earnings or the day of earnings. Next day closed at $88. So pretty significant pullback in the shares post earnings last quarter. So wanted to avoid that. They report on tentatively on November 9th. So I'm avoiding that. We're not to the November 3rd weekly series here, Kev. So just about a month until expiration, 32 days. We're going to buy an unbalanced call butterfly to the upside. If this analyst note comes true, this type of strategy takes advantage of a move higher over the next 30 days or so. Buying one of the 92 strike call, that's basically just out of the money to the upside. It was a little bit higher at the money prior to this, but buying one of the 92 calls, selling two of the 99 strike calls, and then buying one of the 100 strike calls. So this unbalanced or broken wing call butterfly to the upside, pay at $250 debit roughly. It's probably about $240 right now. But the debit you pay is going to be your risk, $250 per spread. You see that break even of $94.50 on this one. And that's only a few bucks above this current share price, Kevin, with a little bit of a kicker right at that short 99 strike. But Kev, this is you know, a medium-term type of trade that takes advantage of some upside.
Yeah, this is just I wouldn't say a classic butterfly because it's a $7 spread financed by a $1 spread, and you're using that $1 spread to lower the net debit, which is in turn the risk on this trade. So you've got 92.99, that's a $7 wide. Then you've got the 99.100, that's a $1 wide. So that risk there is the 92 plus whatever debit you pay for that. And then you've got profit from there to the 99 level and beyond. It just drops off between 99 and 100, obviously. But you know, this is a trade we do a lot on this show, or look at a lot. It's a way to present a bullish posture on a name and use a short call vertical to lower the cost of the long call vertical. Doesn't eliminate it. Doesn't do it for a credit. You still got risk. But the risk is the debit paid, Tom.
Yeah, definitely. And as I mentioned, you need about $3 move to the upside to get above that break even. The debit you paid is your risk on that. You're collecting about nearly 30 cents on that $1 wide short call vertical that's embedded into this.
Got the three.
So you're reducing your risk somewhat on this, but you do have some transaction costs. No commissions on that example trade. But a good way to look at this, if you think this is going to grind up higher into earnings without having that earnings event risk. Kev, we got about 35 seconds, 40 seconds here. What's your take? Because equities on session lows as we speak, still seeing some pressure.
Ugly month of September, starting out a little ugly here for the month of October. Remember, October is a choppy, volatile month, not necessarily a bearish month though, Tom. So we're going to get a bunch of earnings come the 13th and beyond. So there's still a long way to go here in this month. It's going to be a fun one though. It's going to be I expect a little volatility, Tom, but big data week this week that we'll be covering extensively.
Yeah, and those Elite 8 names, Kevin, all look positive at this point. We got Netflix, Google Alphabet,
that's higher straight.
platforms, NVIDIA, Apple, Tesla, they're all positive. The NASDAQ 100, the NDX, is trying to hang on to gains. It's just slightly in the green. So we'll continue to watch equities and the pressure that the higher dollar and higher yields are having on equity markets. All right, that's going to do it for Kevin and I
consolidating here
on Fast Market. But stick around right here on the Schwab Network. Next Gen Investing's coming up.
Next Gen I. Diamond's got there. fast. This guy's just trying to get my bluff. Bounce there on Spy. Trying to stop me out. Brian. Ooh. Yeah, if we make it down there. Nice double bottom queen ace. Yeah, 422. We'll see though. I mean, like, this could have just been consolidating on this downtrend. So, double bottom might happen, but it might not be a very big bounce. Just like an inverse cups, might just get a little handle bounce. Would put us maybe back up to where we are right now. Oh, it's getting close. If it rejects here. was. About to get stopped out right here. It's going to be either right where it rejects or right where I get stopped. Of course, that's where it is. Could have gotten just a tiny bit better entry. Hold. Stopped out. We bounced. Guess I could have taken more profits. Well.
Again, highlights some overall concerns. Tesla's
Another
pulled
setup.
back. I mean, pretty significantly over the last month. We're down about 16% from 52-week highs. But Alex, I'm curious your thoughts, because a movement as little as this in Tesla shares to me says this wasn't that important to the market, I guess.
What I find the most curious about it is you did sort of see a reaction before the market. The stock was down about 4%, but the market itself wasn't all that weak. Then the market gets weaker and Tesla rallies back to unchanged. So there's just like no correlation right now. It's not like there's something that should be leading the overall tech stocks higher. Yields are higher once again. Bonds are weak. Yet we have NASDAQ stocks out in front, and Tesla decided to join the party as the stock clings on to a slightly above the unchanged line move today. But when you see that morning jump lower, we see behind us there, I mean, this is a win for Tesla bulls, I think, given the fact that this stock was down. I know it was only 4%, and we're used to big volatility in Tesla, but in the end, hey, any green is green day, and I think that's big for investors, particularly after an event, because an event can be positive, but can also be negative.
That is very true. So I guess hanging on to even a small gain is still considered a victory here. Our next name is Rivian, though, very fittingly so, as Rivian did also disclose some of these quarterly sales figures, which, unlike Tesla, Rivian actually beat expectations by a pretty large margin. So Rivian produced around 16,300 vehicles at its manufacturing facility that's located not too far from here in Chicago, in Normal, Illinois, as it did deliver around 15,500 vehicles. Now, consensus has called for around 14,000 vehicles. As a result, Street seemingly pretty optimistic on this name. Evercore did upgrade shares to outperform from in line, saying that the EV maker is resonating with consumers, saying that Rivian has a brand that has stuck the U.S. landing, and most importantly, within segments everyone wants, like the SUV, the truck, the van, saying that right now they can execute on both cost and delivery targets, which is de-risking the path to break even. So even though Rivian is not even able to hold on to its gain, I think that just happened in real time, this analyst still sees these numbers as positive.
No doubt. I'm starting to see more and more of the R1S than I am. I've only seen, I think, one or two of the trucks, but the SUV starting to really pick up amongst the vehicles I encounter on the road. It's a slick-looking car.
So it is, and I saw more Rivian. I know we're in Illinois. We're not far from Normal, Illinois, where they're produced, but I was in California over the weekend for the market drive. I saw more of these vehicles than I've ever seen before. I mean, like, everywhere.
You're in like the heart of Silicon Valley, so I'm not surprised by that, but it does go to show that they are starting to hit delivery numbers. They're starting to actually get them out there. And what was Tesla's best marketing? Having Teslas on the road. When you see one, it catches your eye. Tesla, we're getting a little bit more normalized to, but Rivian still have that almost like star-like factor to them. When I see them, I get a little excited.
I know. When I see Lucids, I also get a little bit excited because those are also very, very sleek-looking cars. So, I mean, we could discuss these names all day long. All year long, we have been discussing them. But we'll move now to more of a shipping-focused conversation. And these stocks, both FedEx and UPS, are so, I'd say, important to the overall consumer, as well as an overall barometer of that consumer health. Because, as we know, with online shopping, this dictates a large portion of now the retail world. But FedEx today getting an upgrade at Susquehanna to positive from neutral. They said that they see a re-rating as a greater than near-term cyclical risk for FedEx, viewing that long-term upside opportunity in FedEx shares from cost rationalization, and as well as valuation re-rating as a far greater than near-term cyclical risk. So FedEx is down about I mean, slightly on the session here. This name, though, has been such a consistent outperformer, especially when we'll look at its closest competitor being UPS. Shares are up 52.5% this year, only down about 2.5% from their 52-week high. So the story in FedEx has been a cost restructuring. They've committed to almost $2 billion in cost-cutting implementation
grab
for
some
the
more
next
puts.
year. Seems like the street really likes that. Sort of
Get back
echoing
in.
actually Meta's
Could've been
year
my
of
stop, I guess,
efficiency is
but-
like FedEx with its
well.
efficiency in shipping.
Yeah, they're hoping that that game and that script will play out like it did for Meta. It was really the turning point when Meta went all in on cost efficiencies and less so on Metaverse was a really key point. We'll see if FedEx can take a page out of that Meta playbook and implement the same for themselves. Next one is not too far distant competitor, and that is, of course, UPS, the more domestically focused shipper. But, I mean, two businesses doing essentially the exact same thing, but seemingly can never move in sync.
I know, and this is what's been so amazing to me. And I know you do a great job illustrating the way these are not operating in the same shipping world as they, one service is international, one service is more domestic. So that's why we don't see them perform quite the same. But it's interesting. I don't know if I can recall a time in the last several years where I've seen such a really difference in these companies' performances because, like I just mentioned, FedEx has been an outperformer on the year. UPS is down 11.5% year to date, down off its high by about 22%. So continuing to see some weakness today, down just around 1 0.4% here. Susquehanna also same analyst, but adjusting its price target to the downside here to 160 from 173. They did keep a neutral rating, so they basically just feel like things are right now valued pretty much correctly based on the fact that we're only about $6 away from that price target. They do not see much improvement from here clearly, but this stock does have an average rating of outperform still. Price targets ranging from $100 a share all the way to $230. So street, someone sees some upside here. Just doesn't seem like it's Susquehanna today.
One of the things that stuck out to me in this note is they highlight that Amazon is still UPS's biggest customer. To me, are we watching in a different scenario, sort of that Foot Locker Nike situation where Amazon's trying to cut these players out? They want to do it themselves, make it cheaper, make it more quick, more efficient. Does UPS have other demand elsewhere to replace an Amazon if Amazon's able to cut them out? That's a long-term conversation I think that many are having at a company like UPS.
I will say, though, that from a purely anecdotal standpoint in terms of delivery on time, it goes Amazon, and then I think it goes UPS, then FedEx, then USPS. Is like, maybe you'll get your mail, maybe you won't.
Yeah, I think I'm still watching my mail go to my former address, but that's a question for another. That might be user error.
Yeah, I was gonna say that. I think you have to reroute some things. That's a pain though. But we'll be looking at our two votes today. We'll be going into the shipping conversation a little bit more as these charts. I'd say we have a lot more to discuss, just given that disparity in their performance. We'll be looking at UPS as well as FedEx coming up next with our chart master. Stick around. Next Gen Investing. We'll be right back.
Ten after 1. See what Spy's got in store here. My bear. Selling one there. Just midday. Could still be getting some chop. GME down 7.2. Wow. Consolidated the lows today. Really not a bounce at all, just consolidating. Might see some pretty good volatility starting to pick up on GME. And volume. I already see it. These last 3 days, the volume's been elevated. Not good to see on the big red candles. Pretty bearish. Day being the higher volume. Might match this day back here at 928. Oh, that was the news Ryan Cohen's gonna be CEO. Oh, another one. Probably get stopped by the rest. Oh shoot, I don't think I put a stop on him. Totally forgot to put a stop on him. I won't refresh, I can't tell what's going on. It's not real-time data on my positions on Fidelity. It's a good platform. I'm out. I don't even know. Fidelity sucks. This little double bottom there on SPY. I couldn't close them. I closed one and I closed the second one, and then the whole position just like you have to just wait to see what's going on. I mean, most bullshit in the world. I mean, he kind of was already in that position. And the street doesn't really take well to cone outs anyways, so yeah, Fidelity, like, you can hold stuff in it, but it's for trading, it's goofy. Might be time for calls. This bottom is kind of tapering. Start with that double bottom. Doesn't run away from us too much. Yep. What was that guy? Storage Wars? Yep. I think I got calls. I'm not sure. I like this double bottom. I like how it didn't continue on this trajectory right here. Now we gotta just fight this bot. Fight it shall. Should have drawn those lines before I got my calls. Whoops.
To November, there was only $10 wide strike availability. In order to make this a little bit more accessible trade, some of those shorter term expirations had $2.50 wide strikes. And so what we looked at here in FedEx was going out to the October monthlies, as I said, selling the 262.5, 260 put vertical for a 75-cent credit. 75 bucks for the max profit. Max loss is 175. Need this stock to stay basically where it is. Stay above 262.5. One would then hope that this would expire worthless. That's your max profit scenario. Break even, simply subtract 75 cents from the short strike, and you get 260, 175. Risk a move to the downside below 260. So while this is neutral to bullish, Jenny, one could make an argument that it's bullish because you don't got a lot of wiggle room. You have some, but because the stock doesn't have to go higher, we'll call it neutral.
All right, I'm gonna transfer.
I think that's a great way to look and play into some of the strength, while also considering that we can
I'm
see
moving
some
up.
movement to the
I
downside.
think I have calls.
It's been an outperformer, obviously. Now to shift gears, though, and look at a name that has not been an outperformer, and that is UPS. Although, Rick, I will say that they get my packages to me on time. So from a sentiment standpoint, I have nothing but positive things to say about UPS, but walk us through what you're seeing as far as the charts look.
Well, the chart does not match your positive feelings there, Jenny, unfortunately for anyone bullish in this name lately. And, you know, I think it actually looks a little bit worse than it really is. We do have a pronounced downtrend starting from all the way back in from those highs that we saw on July 24th. We took out our yearly lows recently as well, that red dashed line there near 155. And I guess, though, we're only down about 20%. Now, only down about 20%. You know, some people might kind of roll their eyes at that. But, you know, we've seen much worse charts recently. There's a lot of it could be much worse.
I'd like to take profits, but I don't know if I have any.
Despite how consistent this downtrend has been. We did find a little bit of support near that 155 mark. We've kind of zigzagged around it. We are ultimately a little bit below it today as well here. So not a great sign once again here. And I don't mean to speak out of both sides of my mouth here. The trend is certainly down. You can see that just easily at a glance, drawing this channel on our chart here. But we can also see we're far below our moving averages. The moving averages are pointing down and diverging farther apart from each other. And we just recently made new yearly lows. So none of that paints a very pretty picture for the bulls in this scenario here. But I think that when we look at our next chart here, when we look at momentum, there might be a little bit of a bright point, I guess, Jenny.
Yeah, so as far as RSI goes, I mean, we can see some slight uptrend as I can just identify that green arrow, but what are you seeing here?
Yeah, a little bit of bullish divergence here. So kind of, we talked about what was not divergence in our last chart, our last symbol here. This is some divergence here because price was making very noticeably lower closing lows, but RSI was actually trending upward here. Now it's a little bit complicated here because RSI was in the oversold area. So that's a bearish sign. Juxtaposed with this bullish sign of the divergence here, I think that being in the oversold area and being in this rather severe downtrend, I think that maybe is a little bit more important than the divergence here. I certainly would go off of what price is.
Hey, it refreshed. I can see my options now.
Having some trouble here.
Oh, what do you know? I'm down on them.
I would be really curious to see if we can make our way back further up in RSI if momentum starts to recover a little bit, especially if we break beyond this downward sloping trend line here. That might be a good sign for the bulls as well if we were to kind of push above that 155 mark, push above that trend line, and then start to see the momentum recover a little bit to the upside here. So kind of a mixed picture in the RSI, but there is a little bit of positivity here in this name at this point.
Yeah, no, absolutely. I completely agree. And I think that's something that's optimistic to take away here, given that significant downtrend that you just laid out. But as far as support and resistance, what are you keeping on your radar?
Well, once again, on our last chart to look at support and resistance, I chose to include standard deviation channels. And the reason that we do this is when something is making new highs or new lows, there's not really a lot of ways you can project potential support and resistance. So you can see I highlighted that 155 level earlier, happens to match up pretty closely with our -2 standard deviation channel, that orange line, 2 standard deviations below our blue linear regression line. You can also see that we've developed a little bit of a volume node around that point, so there's some heavy trading, relatively speaking, around that area. Now, it's not heavy relative to the other spikes that we see, but given how little time we've spent in this price area, there has been some takers, willing to make some trades at these points. So the 155 level is even more important than we thought initially for price to hold on to there. We are just a hair below our -2 channel. It comes in at 154.44. So 154.44 to 155 is a key area to watch heading into the close today if we can make our way above that. If we do start to slip a little further, that -3 channel comes in near 144.63. Once again, not saying it will get to that point, just that's where our study projects we might find some support to the upside if we break through our trend line. The 21-day exponential moving average comes in just below 159, that yellow line there. So that would be another point to watch for some potential resistance as we kind of assess this product here.
Yeah, absolutely. And I think great breakdown on both of these names. Obviously seeing some divergence in their performance to one another, but perhaps looking at some upside in UPS after what has been a pretty painful year for investors, but we'll leave it there. Great breakdown, Rick Ducat, our chart master. So Alex, now in trading this name, walk us through your thinking, because I think oftentimes these can be seen as like pairs trades or ways that traders will play them against each other. Obviously different performance this year though.
Yeah, Susquehanna was in the neutral camp for this one, so I looked at something in that kind of light,
Laggy.
looking at something that would benefit from limited movement in UPS. What we're doing is selling an iron condor, but I did give it a little bit of attitude and actually turn it into an iron butterfly. So we started by selling the straddle. So Jenny, the first thing was going out to October, the 155 straddle. What gave this some attitude though, as you'll see by the shape of the risk profile, is that we bought a $5 wide put wing and only a $2.50 wide call wing. And so because this was able to be done for a $3 credit, there's no upside risk. You can see it levels off. That'd be a
Thing's
$50
broken, too.
profit. Best case scenario, right at 155 is where this thing could peak out for the full credit. The full credit in this case is $300, so $300 is the max profit. And as the risk goes down, it goes through the break even at 152. There's $200 in risk to the downside. So there's not a huge window here, Jenny, but it is one that benefits if the stock were to go right to 155 and hang out there. But because of how it's structured, because of how it's priced, theoretically, no upside risk.
No upside risk, so looking to capitalize on perhaps what Rick was laying out, which was a slight uptrend, even though we've been obviously in a pretty consistent downtrend, at least over the last several months. So looking to see some optimism in UPS, and I think shareholders would also like to see that, given, again, just the weakness. But we'll
I'm
leave it
moving
there
up some
for this
more.
segment. Now, coming up next, it's time for FOMO. We are talking, I'd say arguably, one of the most FOMO-esque type feeling stocks of all this year. That is NVIDIA. Of course, shares are higher today on some further analyst upside. We'll discuss that more coming up next.
Closed out of one of those calls. Trying to wait a little longer. That's annoying. It skipped over my stop on the downside. Thankfully, it bounced back up and triggered. That's crazy. With how tight of a spread and how much liquidity are on these, I don't know how it'd skip over my stop.
Technology speaks for themselves, but Goldman Sachs today did add them to their conviction list. And this is, again, one of these terms that we joke at because I've been talking various conviction lists, best ideas lists, top tactical ideas list was another one I discussed today, just today. They did also keep a buy rating on shares with a $605 price target. Does imply some significant upside from where we're currently trading. They do expect this company to maintain their status as the accelerated computing industry standard for the foreseeable future, given their competitive moat and urgency with which customers are developing and deploying increasingly complex AI intelligence models. And again, to speak to Silicon Valley, if the amount of attention that is being paid to AI right now is any indication of where the industry feels this is going, this is definitely a name that stands to benefit. I was also discovering different ways you can basically set up threads on X or various social media where AI can be like your social media agent for you. This is something I discovered over the weekend. I'm fascinated by it. It can churn out content for you on your platform while sounding like you. Like it can learn your voice.
Yeah,
and
until that goes wrong, that's a great idea, right?
Well,
until it goes rogue.
That is one way, that is a horrible thought, but just to go, it goes to show the way that AI is continuing to implement my life.
Yeah, this is, I think South Park joked about this too when it came to ChatGPT. Look, the thing for me that makes this conversation difficult from a trading, investing standpoint when it comes to NVIDIA is if you saw this coming, if you were someone who saw the AI, drew the line, say, okay, I don't know about AI, but if this is the next big kind of investment for these companies from a CapEx standpoint and R&D, who's gonna be the beneficiary in terms of the technology and stuff? You draw that to NVIDIA. It makes a ton of sense when the stock's $100 and it's struggling. It makes a lot of sense when it's $200 and still well off its highs. This stock is $450 now and has gone 4.5 times its lows that it made less than a year ago. So to me, the question now isn't that, yeah, the company is benefiting, it's how much of it is priced in and is it even overshot? We were talking about some of these names, the Teslas of the world, the Rivians of the world. They've all had their times in the sun. None of them are trading on their highs. We were talking about the shippers. You know, when things were going very well, you saw those stocks go higher. Still going pretty well for them. It's still shipping a lot of boxes, yet the stocks have all gone down. So I look at this
shoulders
as
up here.
we're starting to
Top
watch
of this channel.
the bullish side get a little bit more crowded. If you kind of imagine these as
trade the range at this point.
Opposite sides of a scale, it's hard to make the bearish argument for NVIDIA right now. There's not a lot of bears on that side of the scale. So sometimes it just becomes the crowded trade. I think that's the risk for investors. It's not that NVIDIA is struggling or something's going to go wrong. It's just how much more upside is there left to squeeze. Granted, Goldman Sachs says it can go to 605. So you can do the math. That's 160 from here. Okay, there you go.
Okay,
$160.
That's crazy. And I was just trying to find the street high. Rosenblatt has an $800 price target. And this analyst has been right, actually. So, I mean, not right like when it comes to just NVIDIA, but right consistently with our coverage. They're not just throwing out an outlandish price target. $800. I mean, the average price target right now, just to say it among analysts, of the 35 analysts I could see, is $521. So, 800 is ridiculous. 600 even feels a little bit ridiculous when the street average is 521 and shares are trading at 447. I mean, you make a good point.
You have to start thinking about it in terms of market cap at that point. Like otherwise, it's just dollars on the screen, right? It goes from 450 to 600. What does that mean? Well, that means it went from being a $1 trillion company to a $1.5 trillion company. If it goes to 800, it's a $2 trillion company. How many $2 trillion companies are there?
4,
One?
I think.
2 trillion? I mean, you got Apple, Microsoft. I mean, is Amazon?
I think Saudi Aramco.
Okay, so there you go. I mean, that's where you're at. Okay, you're bigger than Amazon at that point. You're bigger than Alphabet at that point. Maybe, but I mean, they're selling chips.
They're selling chips. I guess it depends. Is an AI company worth a valuation as lofty as
Are
Apple?
they an AI company, though? Are they actually developing AI, or are they just selling the technology so someone else can?
You're right. They're the back end of AI,
So
but
when
they are
AI
Alex, give her a
finally is
break.
monetizable and it creates all these efficiencies,
Chill out.
are they benefiting from that, or are they having their benefit now? They're the ones who are benefiting now. These other companies are hoping it becomes monetizable. We saw how long the metaverse lasted. If they don't start showing dollars and cents to shareholders in AI, these projects, as expensive as they are, will not get the unlimited runway that they have right now.
And we remember the blockchain and the NFT trade that has completely dissipated. So now when looking at trading the same, we could have this discussion all day long because the AI, timing the AI trade has been difficult, but NVIDIA has been undoubtedly the powerhouse, at least as of now. What are you thinking as far as a trade?
Yeah, and so this is where you can still be positive on a stock and not need it to go to $600 to be profitable. So this is where strategy can help play defense the same way that you're playing offense. And so I looked at selling a put vertical. What have we seen in the market as of late? Well, we've seen a lot of these stocks come down, and we've seen volatility levels start to go up. And so this is a strategy that benefits from higher volatility, and it would be beneficial to do it when the stock's at a lower basis, because if it's at a lower basis, you can get a lower break even, and the same with higher volatility. And so
yeah, not
out
butterfly.
to November, selling the 400, 395, put vertical for $1, break even would be 399, risk of 400 to make 100 on this. So it's not the most exciting trade we've ever done. It's not one that can go from $1 to 8,000 or something crazy. This is just, nose to the grindstone, one step at a time type of a trade, benefiting from the fact that this stock has come off its highs, volatility has come up a little bit, and it still has, well over 10% cushion to the downside where the stock can continue moving lower and this will still be at max profit.
Right, I think that's a really well put way to play into a name that's valuation many feel has gotten a little bit too lofty and a little bit too ahead of itself. But we'll leave it there for our AI and NVIDIA discussion. Now coming up next, we will focus on the airline sector with Caroline Woods. We'll have more on what the latest weakness and headwind is weighing on airline stocks coming up next.
Same hand. Well done.
For Southwest as well. So if you're taking a look, United off about 1.5% today, 1.6%, but United is actually positive on the year as opposed to JetBlue and Southwest. Whereas Southwest is actually reversed earlier losses, is up about 0.3% right now, but is down almost 20% year to date. So they've been performing quite a bit differently. So kind of a mixed picture in terms of airline stocks today.
Absolutely, and Caroline, what I find so concerning is you have a name like Southwest that has been beaten down already into what analysts are expecting to be a weaker back half of this year. So when looking at that performance, I mean, how does the street feel about some of these names that are the laggards like a Southwest versus the leaders that are giving up some of that strength, but they're still undoubtedly, I think, United and Delta?
Well, the leader in terms of the analyst community is most definitely Delta, because 100% of analysts at this point have a buy rating on Delta shares, and that's despite the fact that Delta is higher on the year. It's up about 11 or 12% year to date. I will say, in terms of some of the others, United is the next best performer in terms of analyst ratings. About 70% of analysts have a buy rating on United. If you take a look at Southwest, though, 65% are in the hold camp. JetBlue, there's only one buy rating on Wall Street. More than 70% are in the hold camp, and it's actually trading pretty close to its price target, its median price target. It's at $465 right now, and its median price target is $5 a share. So quite a bit different story depending on the airline that you're looking at. Obviously, fuel prices impact all of them, but others like a United and a Delta have more of the international travel, which has been more of a tailwind lately than the domestic travel, which has been a headwind as they've started to see kind of softening demand of people who want to travel within the United States. So could be good news for us in terms of cheaper fares, although these higher fuel prices might not actually help, those cheaper fares come to fruition.
Right, Caroline, I was also thinking the same thing. I was like, so does this mean we'll finally see prices go down? But I don't think we'll ever get those pandemic fares. That was maybe the one upside of the weird world of travel, right? That we all got to travel for relatively cheap. I missed that one aspect of 2020, and that's pretty much it. But we will leave it there. Great breakdown, as always. Caroline Wood, Senior Markets Correspondent here for the network. Now coming up next, it's time for Under 30. Last but not least, we are looking at Toast, as we have seen some mixed analyst feedback on this name that is down on the session by just over 3%. We'll discuss more with George Tillis coming up next.
was born on the south side of Chicago. It's been a long road, but now I'm working for Schwab. I love to help people understand the world through their lens and invest accordingly.
With George, so I'm excited to get this update. This is a company that maybe the stock price doesn't show, but it seems to be making more and more inroads. I just, if you get takeout somewhere, if you, are in person, you're paying with your card, you just interact with this software more and more. And I know it's anecdotal, but sometimes that's enough to see technology taking hold.
Absolutely, and I do know that from a restaurant standpoint, I know people that are interacted with this interface that love it. So from that aspect, it is loved by those that use it. But here to tell us more on what is not so much the love for this name today, that's out of Mizuho, is George Tillis, senior markets correspondent here for the network. So George, a price target reduction by almost half, also downgrading shares. Walk us through what you're seeing here as far as Toast goes.
Well, I can see, some of the analyst points here, guys, with their downgrade. Mizuho basically is downgrading the stock to $16.30, moving their rating on the stock from buy to neutral. And I can see their point to some degree, considering, inflation has really cut down on the ability for folks to go out and spend money from a discretionary spend standpoint to eat out. But at the same time, people are still going to need to eat, so you have to keep that in mind. I think they also made a mention of the aspects of Toast's business, which I think it's, if you look at it from a technology standpoint, it's very commonplace. It's hard to go out and eat and not see their technology now. And that gives you an idea that their number of installations on a restaurant basis is increasing. In fact, if you look at their last quarter report, 85,000 installations, and if you go back and look 2 years, it was 50,000. So they're increasing their total installations in the last 2 years by about 65 to 70%, which is pretty remarkable. I think if you look at their software, not only from a front order management and ordering system standpoint, and of course payments and checkouts, I think if you look at their back end systems, which include things like labor management, time management, operations management for restaurants, that's a good sign for a company that's getting execution from their software, both on front end and back end. But I think their reliance on payment volume because of payment processing is one of the other areas that Mizuho's kind of frowning on. The other thing, if you look at their business as well, and you go to their website, which I did, they actually have capital funding to restaurants and, of course, small establishments. And I think that area of their business is another challenge that Mizuho brings up. So I can see the analysts point to some degree here. There is some softness and of course, people going out. But at the same time, you have to make a case, or you could make a case here, that the company's growth rate is still pretty remarkable considering this environment. And the stock has already fallen from around $25 to now in the high teens over the past few months or so. So I think there's merit in the call, but I also think that there's still quite a bit of room to the upside in the long term for this name.
Yeah, I thought it was interesting too, because oftentimes we marry companies to their core business. I thought it was quite interesting to see that they're in that financing world, George. How much is that kind of a risk, though, as this analyst lays out in the medium term, if this is more late cycle and we do see a downward trajectory of the economy? I can't imagine that this line of funding is necessarily the most stalwart of credit when it comes to that. If you're going, sort of through a service like Toast for that funding, maybe you're a smaller business, maybe you couldn't get it through a traditional small business loan, and you're going to a place like Toast, maybe at a higher rate. But is delinquency risk a real thing down the line if the economy does take a turn?
Yeah, I think there's always going to be delinquency risk, but Toast is essentially brokering capital. They're not necessarily funding it out of their own pockets. So I think that's what you have to keep in mind when looking at the risk associated with their capital funding division. I think volume is at risk because of capital funding not being able to be had because of higher interest rates. I think if their core business is still growing, which it is, that's really where you have to look at the value here for this name. And that has to do with their streamlining ordering and payments, front office or front end activity from a customer and business standpoint, but also their business to business back order systems for ordering food and managing labor. That's really, I think, the value here for this company.
Yeah, George, I think really well put, and obviously seeing some weakness today, but it seems like this name has definitely at least ignited interest from an analyst standpoint, but we will leave it there. Appreciate the breakdown, as always, George Tillis, Senior Markets Correspondent here for the network that also does it for Alex and myself for this Monday Next Gen Investing. Coming up next, we have the watch list.
Yeah, you better leave. Lucky hand like that. Oh, the flush got there. Hopefully he doesn't have a flush. Bake straight. I was known as a two pair. I have a straight. Eyes coming down. Trying to have a straight. Oh. VinFast is down 21%. Next down 9. Runs down 9 today. Ugly. Buys down 9. Nicola's down 8. Carvana's finally coming down. No, not really. Only down 8.
Averaged down about 0.5% at 33,330, and the Russell down 1.6%. All of this as we averted a government shutdown, at least until November 17th, when that pops up again for discussions. We are seeing oil at $88.99 the barrel. That's down $1.80, and gold losing $18 today. Bitcoin gaining as you got some good findings there abroad, and that's helping Bitcoin and Coinbase and such, up 4%. It's at 28,235, and the U.S. dollar 106.57. For the latest that we are seeing and stories in the markets, we bring in Caroline Woods, senior markets correspondent here on Schwab Network, to talk about those numbers of Tesla. There was anticipation that Tesla's numbers might be a little slower, a little disappointing. What were the findings, and what are people saying today?
Well, it's interesting
Fish
because
is down
Tesla
almost
shares were
6,
actually bouncing
almost 5.
this morning, and actually even a little bit later, I was on Fast Market and we were talking about how Tesla was higher despite a delivery miss. So as you said, the expectation was those numbers would be a bit slower, but even the estimates, the low end of the estimates were higher than what Tesla actually was able to pull through. So they produced 430,488 vehicles.
Yeah, JMIA's getting
They delivered 435,059 in the quarter. The expectation was for anywhere around 455 to 461. So that not only missed analyst expectations, but was also a sequential decline from Q2 when Tesla delivered over 466,000 vehicles. Now, Tesla blamed planned downtimes for factory upgrades. We learned about those on the earnings call, didn't quite know the impact, but obviously now we do. That being said, Tesla did maintain its 2023 volume target of 1.8 million, so that remains unchanged, which at first is what we thought was giving a boost to shares today. Now they've turned lower, so obviously that boost was short-lived. Right. I will say I did see that it did get a price target cut from Truist following these results, now at 243 as opposed to 254. But Dan Ives, who I know comes on your show often from Wedbush, he kept his outperform rating and $350 price target, saying, in a nutshell, there's nothing to write home about, but there's better days ahead. He did point to momentum ahead, calling the Model 3 refresh and production of the Cybertruck clear tailwinds for Tesla into the next year, and says margins are troughing and rebounding from these levels. So he's still very optimistic despite this kind of nothing to write home about report.
Right. I mean, we did see improvement year over year, but you had shutdowns and pauses, and the sequential numbers, the quarter over quarter, obviously not great news there. But that being said, the competitive landscape has been talked about, has been intense, particularly with something like BYD. But all the automakers, I see Ford, GM, Stellaris, they're all down today. We watched some of the foreign automakers. What kind of other EV stories are you watching, or their production numbers?
Rivian also came out with their quarterly numbers. This actually topped, for the most part, topped expectations. But you have to think about it. Tesla obviously has this huge leg higher. We're talking 400
and 30,000 deliveries. Rivian came out and delivered 15,564 vehicles during the quarter. They produced 16,304, but that 15,564, that's up 23% from the second quarter of 2023. Depending on the expectations or the estimates that you look at, it could be a beat, could be in line. They kind of ranged, but they also did say that they're on track to deliver their annual guidance of 52,000 vehicles for the year. So maintaining that previous guidance like Tesla. They did get an upgrade from Evercore following the results to outperform from in line with a price target of $35. That's up from $30. Rivian's currently trading down 2.7%, giving up earlier gains, trading below $24 a share now, so more than $10 upside a quarter, according to Evercore. And it's interesting because this analyst said he hates being asked who the next Tesla is, but he said there are key similarities that have made Tesla, and you mentioned BYD, responsible for greater than 40% of the new energy vehicle sales. And he said those three things are brand, scale economics, and vertical integration. And says outside of Tesla and BYD, Rivian is the only OEM showing increased evidence of meeting all three criteria. So they would be buyers at current levels, and they expect solid production and deliveries to be reported. So they're definitely in the buy camp. The majority of analysts for Rivian are in the buy camp. But if you take a look, Rivian shares, they're up about 28% year to date. So actually performing quite well, but nothing compared to Tesla, which is up over 100% year to date.
And nothing compared to when Rivian came public.
Right.
It was flying high, and everybody's saying to me, would you buy it here? And first of all, I don't give stock advice, but no.
Yeah.
Basically, most of the people who came on our show said no. And you made a good point. I mean, when you talk about the numbers and the comparison, when you're talking about 15,000 versus 435,000, or for the year, 52,000 versus 1.8 million.
Just goes to show the leg up. But we were talking on Fast Market. I don't know about you, but I'm seeing a lot more Rivians on the street now. So they're getting there.
I mean, they're all becoming very popular, there's no doubt. All right, Caroline Woods, thank you for that. Now let's take a look at the bigger picture. Sam Stovall's with us, Chief Investment Strategist at CFRA. Good afternoon to you, Sam Stovall. Good to see you. You knew we'd avert that government shutdown, didn't you? It was all political theater until the very end when it just left us sort of on the edge of our seat. Your thoughts on the market right now?
Well, I think that the market, one reason that is down today rather than being up is because Wall Street typically regards the fireworks, the dramatics that come out of Washington, D.C. to be more of a headline event than a bottom line event. But at the same time, I think we are continuing to see the up creep in the 10-year yield, which obviously is causing additional
Auntie Caroline.
for investors.
Got a wholesome nature about her.
Volatility is going to remain around
people.
Throughout this month as we move toward the next FOMC meeting. And I really don't think that we're headed immediately toward recession, because if that were the case, I think that the yields would be coming down as investors anticipate that the Fed would have to respond by cutting rates.
Right. You know, I had one guest on who said the recession is always 6 months away, that we are all waiting for this recession, but it always seems like it's not here just yet. And to your point, with the 10-year bond yield, for example, right, it went to 4.7. It's the highest since October of 2022, but it would be coming down if we were really facing recession right this moment today. That being said, what do you think the Fed should do in September and November?
Well, I mean, we still have one more rate hike sort of penciled in, and I say penciled in because you can always erase it if things change between now and then. And our belief is that we're on track for the Fed to start to cut interest rates by the second quarter of 2024. So that too would be in line with the traditional wait of about 9 months between the last rate hike and the first rate cut. But at the same time, the market tends to do fairly well, up 13%, accompanied by all sizes, styles, and sectors.
So that being said here, are you concerned also about the deficit? Because a lot of folks are saying even worse than the government shutdown would have been is the deficit, which continues to loom. Do you hear people talking about that a lot?
Well, it's typically one of the questions that I get certainly more from retail investors because they too are concerned about the deficit. Maybe they themselves have debts that a little harder to fund as interest rates rise, and they're not able to get the kind of loans that they like to. The government really doesn't have to worry about that. They can certainly print their own money if need be. But with interest rates continuing to rise, yes, that is a concern. And you sort of wonder if the debt payments will end up crowding out other payments that the government would prefer to make.
Right, understood. We'll be wrapping up this year. A lot of the guys I'm talking to are still expecting some sort of Santa Claus rally. Next year's an election year. What are you thinking about the direction of the market and why?
Well, I'm anticipating euphoria, as I call it, because historically, since World War II, the fourth quarter of the pre-election year for a first-term president has been a gain of almost 6% on a total return basis, with the market being up 100% of the time. That's certainly not a guarantee, but a very encouraging track record.
That's pretty amazing. That is actually really amazing, and I like that you coined the phrase here. That being said, talk about some of the sectors. Are there certain sectors? I mean, last week, for example, oil really took
climbing up a little
cake.
more.
That was certainly the great performing sector of the week, while
After
for the
two,
most part, most of the
almost a
sectors had
VWAP.
down arrows. I mean,
Still down
technology
0.3%.
squeezed out a gain. Are you leaning towards certain tech advice to investors?
Got a
for
lot of liquidity here
growth
from the
and
morning
sectors that you do like?
for an inverse head and shoulders.
Yes. We basically don't tell investors what to buy and sell over a very, very short-term time frame. CFRA
volume on that
equity
break.
analysts look about a year out
Cow.
with our stars or stock appreciation ranking system. And right now, when you look to the technicals, whether it's short-term relative strength or longer-term relative strength, as well as the earnings growth potential for 2024 with double-digit earnings increases expected for communication services, consumer discretionary, and lesser so for technology, we still think that there are longer-term opportunities in that growth space. And at the same time, combining fundamentals with technicals, you want to be avoiding the utilities, consumer staples, as well as healthcare.
Right, understood. And are you concerned about the rising dollar, for example,
There's
or anything that's
VWAP
going on abroad that is on your
on
mind
this
that you can
SPY.
share with us that might be really important to us as investors here at home?
Well, I think once the Fed stops raising rates and we stop seeing the 10-year yield continuing to climb, it'll become less and less attractive for foreign investors who invest their money over here, and that adds to the strength of the U.S. dollar. Also, I find that when you look to relative valuations, the developed international is trading at a 20% discount to its long-term relative PE versus the S&P 500, also trading at a higher dividend yield.
Saved my day.
So I would tend to say if
Third
you
string.
are a longer-term investor, opportunities can be found overseas, and you get paid while you wait.
Right, understood. It's great to see you, Sam Stovall. So glad that
I'm
you're
gonna get some
on
more of
with
these
us
on a
and
little
always giving us
retested
the
VWAP.
perspective that we need for the week ahead. You want to give me a quick thought on jobs?
Yeah, well, actually, I think that investors might be pleased because we're probably going to see the job picture come in a little bit weaker than what the street is expecting. We do think that we will see the move to about 3.7% on unemployment, but only about 145,000 new jobs, not the 160 plus that the street is anticipating. And a final note, Nicole, I always enjoy being on your show with you.
Thank you, Sam. We've known each other too many years to count, but enjoy every single one of them, and each one is perfect. Thank you so much, Sam Stovall. Wishing you well. Thank you, CFRA. Coming up next, time to take a closer look, looking at market risk. And you know what? Meet Schneider is with us with Market Gauge, and she's saying some risk on is poking its head out. How about the Tesla deliveries? We'll talk a little more about that. Schwab Network. We'll be right back.
What's up, Psych? You up? I come back down to VWAP. Another entry for some calls here. Breaking below VWAP. Around Steel. Cambodia, huh? No, SPY doesn't want it. Dang, should have sold more. Back to break even on these. I stopped out of the rest. That's the third time I've taken profits on just one contract, leaving the other one to keep going, and just turns around and stops. Just English for the most part. understand a little Spanish. Speak a little. Un poquito. Yeah, I've traveled quite a bit. Lived all over the world. Mostly US though. AMC above VWAP. Green 1%, GME down 6.5. I coming right back down here. Wow. The take profits type of day. I could take all profits. Not some.
When we mentioned something like Coinbase, and we're seeing Bitcoin higher today, you got at least one win today overseas, and that's helping Coinbase move higher. You have an Ethereum ETF that launched today. You have the spot ETFs for Bitcoin that are under some scrutiny by the SEC, but in October is when we're going to hear more from the SEC, which is now. You know, is that something you would think every portfolio should have something like that?
Well, what's so interesting about Bitcoin is that it actually did well in September. And statistically, when it does well in September, it goes on to do well for Q4. And so there's a target right now that we have at about 31.5 before we reevaluate. And interestingly enough, it so outperforms some of the other cryptocurrencies. We've been in Chainlink. Solana looks like it could potentially be ripe here. So I think this would be a good opportunity to take a look. And those who actually have been doing dollar down averaging have done well in that space. So yeah, we're kind of friendly to that right now, and especially looking forward. And it's decoupling a little bit from the market.
Right. You know, Mish, you had so many great notes, and I can't possibly hit everything that you had on here. But is there anything that I left out that you do want to add?
I think the biggest thing to add right now is if you really want to look anywhere, to me, I'm still convinced about commodities. So I like to look at DBA and DBC. They cover the breadth of it. They have outperformed everything, even with this correction. Commodities correct, that's their nature. And I think if we see any downturn in the dollar and in interest rates, while people may think that's such great news for equities, I think it's better news for commodities. So I'm still in that camp until proven otherwise.
Yeah. Good to see you, Mish Schneider, MarketGauge.com. Thank you so much. Coming up next on Schwab Network, the CEO and CFO of Gen Biotech. So we'll talk more about the company, now being a public company, fighting cancers and diseases, Parkinson's disease, Alzheimer's, live on the NASDAQ, NKGN. Take a look at it.
You know that tech stock we talked about? I picked up 500.
Well, spies coming down there.
with something like Biogen versus Alzheimer's. I mean, that was a huge story on Wall Street for a little while. I think everybody gets really excited because they really want to fight the battle. What's going to be different here, and what kind of time frame are you looking at?
Well, it's a great question. So most of the treatments out there right now are looking at something called mild cognitive impairment, or the earliest forms of dementia or Alzheimer's disease. And unfortunately, the products that have been out there, they've done a good job at reducing some of the proteins that have been associated with the disease, but no one has actually gotten better. All they have done is really slowed the progression of the disease. We've taken a whole different approach, a much more holistic approach, in that we found natural killer cells actually can cross into the brain and not only remove amyloid proteins, which are what most of the current drugs are focused on, but also a second protein called tau proteins. And in addition to that, also start to reduce neuroinflammation. And we're focused more on the moderate to severe population. This is the majority of the patients out there that unfortunately the pharmaceutical industry or the biotech industry has largely written off because there has not been anything that's been working. What we're looking at are patients that can no longer talk, walk, maybe even feed themselves, and looking to restore a lot of these basic functions. And this is a population that unfortunately very few are really trying to tackle. So we think our approach to this is a much more holistic approach rather than just removing one protein.
Yeah, understood. So you're, removing degenerative proteins, and you have the reduction of inflammation, which is not only slowing this, but almost, you're trying to really reverse it. And that's the difference, I guess, what you're saying between these natural killer cells and what other folks are putting out there. Are you planning to partner, Paul, with any other? I mean, research and development is very expensive. I know James said, you're trying to move forward with a lot of success and not too much on the balance sheet to do it. Are you planning on partnering at all? Do you partner with some of the other big names that we know so well?
So as I mentioned, we were in stealth mode. We just recently presented our preliminary data from our phase 1 trial at the International Alzheimer's Association conference in Amsterdam in July, and started to get some interest based on the work we're doing. The good thing about when you're looking at more moderate to severe disease versus early mild cognitive impairment is that in mild cognitive impairment, you're trying to tease out very subtle differences, and you have to enroll thousands of patients. When you're looking at more of the moderate to severe population, your population of patients that need to enroll is much, much smaller. So the studies tend to be much cheaper to do and also much faster to do because you don't have to enroll nearly as many patients to show the subtle differences. Again, the other trials only slowed progression. What we're really looking to show is not only stoppage of progression, but actual real improvement in patients who have generally not been felt to be able to get better.
Right, understood. And James, as you said, you have extensive experience. If anybody looked you up, they would see the listings that you have worked behind in the past. What makes this one different? Sometimes SPACs are good news or not necessarily so. I know you have a lot of high hopes for this one, and you think about the administration, you think about the regulatory environment. What would you like to see happen here?
Well, the thing I can say most definitively about this is that, in all the years I've been doing this, I haven't been compelled to join the surviving company after the SPAC. Usually the SPAC will complete the business combination and move on. But, this was such a compelling story. I was so excited about this that I've joined the company as the CFO. Which means
that really is exciting.
Telling the story and working on the balance sheet and telling the story in the market in the coming months.
Yeah, good. So we'll have to have some follow-up conversations here as the months pass and you continue to do your trials and have more findings. Paul Song, MD, and James Graff, CEO, CFO, thank you both. It's great to see you of NK Gen Biotech. So you can check that out. NKGN is the ticker there. Still ahead in the second half of our show, U.S. government shutdown. Well, it's been averted for now. You can move forward to November 17th. That's when it's been pushed off to. And how investors should be approaching the debate as some of the risks remain. As we head to break, take a look at winners and losers in the S&P 500.
Look at this GME consolidation. This is crazy. It's the same thing we saw last week too. Whatever algo this is, it's been on repeat. Alright, I got back into some calls there. See what power hour brings. We got 20 minutes of power hour. And 424 puts. May the odds ever be in your favor. I just see it move back up to VWAP for end-of-day safety, if nothing else. We also have this inverse head and shoulders down here. And this bottom didn't continue down this trend. Made a higher bottom, higher low really. Looking for this to hold. If this doesn't, look for that horizontal to hold. If that doesn't, something above this trend line to still be somewhat bullish, but this is pretty big room for error, so I won't be holding all the way through there. In fact, I'll probably close right here if we break this. Yeah, I'm out.
To the week and the quarter, you can see here where we stand relative to last month's
Highs
highs.
coming down here.
Begin the month of October near the lows for September. So keeping an eye on that. I think that's the real line in the sand right now for the bulls. They don't want to see this one back down below that low from last month. If we could regain composure and start to form a bit of a bottom here, that'd be great, considering some of the strength we're seeing here in the NASDAQ, a bit of a stand alone in the tech-heavy index today, considering what we're seeing in rates higher, the dollar higher. I'm not surprised to see the Dow down to 33,219, and the Russell really took a hit down into that below 1760. Taking a look at where we are relative to the 50, the 200-day moving average, I mentioned the S&P is nearing that longer dated. We've been holding below the shorter dated for a while, and this is a pretty good representation of what you'd see if you looked at the Dow, again, also in the NASDAQ. But here's the Russell, as I mentioned, and small caps have been very weak relative to the broader market. This break below 1,800 last week, holding and opening below it this week. And just really want to point to how we're actually below that longer dated, the 200-day moving average in small caps. So it'll be interesting to see if the selling continues
Small
here, or
claps.
if we can again bottom out and start
Pretty
to regain
much.
composure here. But if not, I think a lot of people are going to be talking about how
Trading in
this
the small
broader-based
claps.
representation, again, the Russell was a bit of a canary in the coal mine, as it has been indicating some weakness for a while now. Basically,
All right, testing this
since
low
those
here,
highs that we saw
horizontal
in
for
July, as we
support.
came back down off of the 2,000 level.
Right, understood. So at this point, too, the other thing that's really driving markets is you still have this high rate environment. I mean, we saw rates moving to the highest level since 2022, at least for the 10-year. Dollar still strong. I mean, what are you watching when it comes to those levels, and why does it matter?
Well, for one, the levels and the run-up we've seen there, and then the ripple effect that it has on some of the other markets, like gold, for example, with the move higher in rates and the dollar. We're back at 7-month lows, back below 1,900. But taking a look at the greenback to a new high for the year and up and through the middle of this 106 handle, you can see the trajectory that's been playing out here to the upside. This is a look at the move off the July lows down around 99.22. That's the year low print. Here's a look at that move that we just looked at from July to, again, 106.50, but I wanted to show you how it has us back into levels that we haven't seen since the fall of last year. So this comes with rates which have been on the rise. We're looking at the 30-year on the left, the 10-year on the right, and look at this, Nicole, the 4.7% in the 10-year. You've got to be focused on the fact that we've got the dollar on the rise, 10-year yields on the rise. That is a headwind for stocks. And ultimately, it does have a ripple effect, right? Crude oil has actually come off the highs that we saw earlier this morning. It was around $92 back to $88.60. I think a big part of that is strength in the U.S. dollar. But all of this kind of ties to what we've seen as far as strong jobs, numbers here in the U.S. suggesting a soft landing, if not pushback for a recession ultimately. And yeah, a lot of focus here on yields, financial markets in general as we begin the fourth quarter.
Yeah, thank you for all of that. It's great to see you. Thank you, Ben Lichtenstein. Good luck there at the markets. All right, let's welcome in Eric Hofgees with us right now, Chairman and CEO of SunWest Bank. Thank you for being with us. Of course, we made it through this past weekend. What did you think the extension may have solved, if anything, for the time being? Because really, it's just going to rear its head again in November. November 17th is the next date that we need to mark on our calendars.
Well put. I don't think it really solves much of anything at this point in time. So, they're just kicking the can down the road. Look, this fundamental issue is the degree of deficits we're running and the structural debt we have put in place. I'll give you a stunning statistic that still has me reeling. We've racked up more debt in the last 3 years than we did in our country's first 232 years. I mean, that's hard to conceptualize, but really that is the fundamental problem. And Washington doesn't want to deal with the spending problem. Even though now we have the interest costs on our debt getting ready to equal our Defense Department budget, and is the second largest expenditure with the Defense Department costs other than Social Security. So just the interest costs on our debt is skyrocketed. So they have to address this at some point in time. I applaud members trying to force it, but nothing is really happening to deal with the underlying issue that we have right now with the structural deficits we have in place.
Right, and I know that there's been a lot of talk that people were more concerned about the U.S. deficit than they were about the government shutdown because they worry about our credit rating as a country, right? Isn't that a fair statement?
100%. All these people that say, oh, you go through a shutdown, if the shutdown lasted a week, 2 weeks, a month, I don't think that's really going to impact our credit rating. Look, my bank, we buy a lot of treasuries and have a pretty good treasury holding. I have a lot more concern about the structural deficits and the total amount of debt than I do about a government shutdown for a couple, 2, 3 weeks. But that's just one of the ways that they whip up the hysteria to try to drive people to cut a deal. But instead of cutting a deal on figuring out how to drive down our deficits, it just continues suspending as usual. And what my big concern is, we're going to possibly reach a supply-demand imbalance here really soon on treasuries. And it may be part of the reason why we're seeing yields continuing to rise, because people are saying, how are we going to get out of this mess? And they're going to demand a higher yield to step into that, particularly anything with duration. So I'm much more concerned about the structural deficits and overall debt than I am about a temporary shutdown. And I think most investors hold my opinion on that.
Right. What would you tell investors now for short-term and long-term? You know, I don't know how much market advice you're willing to give us today, but your thoughts on that?
Look, you know, it's hard to make a decision because the whole rate market moves in certain bands, and it stabilizes, then it moves again. You know, your prior colleague was just talking about the strength of the dollar. If all of a sudden we get into a supply-demand imbalance at some point, call it next year, that there's not enough private buyers and the Federal Reserve is going to have to step back in, instead of doing quantitative tightening, draining all that excess liquidity they put in the system during COVID and the lockdown, should I say, then they have to turn around and start doing quantitative easing. Well, you can guess that that dollar is going to roll over. You're going to have significant weakness in the dollar, and the inflationary pressures are going to pick right back up. I mean, he was just mentioning how, you know, oil coming off a bit because of the strength of the dollar. Well, that will just go in reverse. The dollar will weaken, and then inflationary surges like the price of oil will come back into the system. So we're in a complicated, very difficult spot that our politicians have put us in.
Yeah, and as we watch GDP and we're somewhat concerned, people are still concerned about a recession, still thinking the Fed likely to have some cuts next year. Are you worried that the Fed may continue to keep hiking and it may be too much, Eric?
I don't think the Fed is going to hike more than one more time. And I think they're having a problem dealing with the underlying inflation. I think draining their balance sheet helps take out that excess liquidity. Look, I'm a monetarist. This whole supply chain disruption, I just don't buy that argument. Sure, did that play a role in creating inflation? You know, in different pockets of the economy, of course it did. But I mean, you can look at, you know, the supply of existing homes, of used cars, of a whole host of items that just skyrocketed because we printed so much money. I mean, we never had in our country's history increased our money supply as rapidly as we did during basically a 24-month period with the start of the lockdowns. So now they're trying to drain off some of that liquidity. But again, if they have to turn and reverse course because of these deficits and there's not enough private buyers, then, you know, we could get in a position where inflation starts to really reaccelerate again as the Fed starts expanding their balance sheet.
Yeah, and it really squeezes folks. I mean, we see them using their credit cards. There's concern about default on payments and things like that. Eric Hofte, thank you so much. Chairman and CEO, SunWest Bank. Thanks, Eric. Still ahead, let's talk energy. Our panel is ready to talk about oil and energy markets, the trends that could shape the months ahead, what we need to know. We got you covered next.
Minutes to power hour. AMC's up 1.7. GME just been pinned. Pinned down here, down 6.5. Very choppy day on the market today. Be an ugly day for trading, really. coming up some there. 8 minutes to power hour. Yeah, a little inverse head and shoulders, what I was thinking. Well, Mr. Invest. I got this one too, this larger one. Tried to see a bottoming here. Now this low is not as low, so been good for a move back to VWAP, I'd say, by end of day here for some safety. But it's been such a choppy day, it's like, can't count on anything.
Optimistic on the longer front, right, Dryden?
Exactly. I mean, we're going to have some volatility in the market now. We're going to have some, pullback in various places. But I think it's an opportunity to enter the market as opposed to run away from it. So we're going to have some volatility here between now and the end of the year, but we see that as opportunity as opposed to anything else.
And is there a divergence happening, Stuart Glickman, whether it's oil versus some other commodity that you're watching closely that
Maybe it'll build a little right
might
shoulder
move
here.
in conjunction with oil, but is moving differently at this time?
Well, natural gas this time of year always is volatile because so much of
Sure,
gas
look at that.
demand is weather dependent. And if you remember last year over the spring and summer when Putin stepped across the border into Ukraine and natural gas prices went haywire, and then starting in the winter really started to peel back a lot, it was because we ended up with a warmer winter, than usual in Europe. So I think that's probably the thing that a lot of traders are going to be focusing on is what the weather outlook looks like, because that's something that's very particular to natural gas and different than crude oil.
Yeah, wonderful to see you both. Dryden Pence, Stuart Glickman, thank you so much. And thank you, friends, for being with me every single weekday here on Schwab Network, 11 a.m. and 2 p.m., live from the New York Stock Exchange. I'm Nicole Petalides. And keep it right here. Market on Close is next.
Or they're at a high and they're about to get rejected. Geez, Sunrun down 10%, 10% today. Yeah, what about oil? Oil is getting dunked on? Or is it just Oxy? Yeah, oil's dumping.
jolts tomorrow morning.
Hour.
They're expected to be up to 8.9 billion million jobs, just slightly
9
higher
billion million.
than the 8.82 it was last month. And then we'll get into ADP on Wednesday, jobless claims on Thursday, payrolls on Friday. So we've got a big week of economic data planned. And so when we look at that, look where rates are, when you look where the U.S. dollar is, this bumpy start to the week, we'll see where the rest of the week takes us. But the data should drive us the rest of the week as we're in that chasm, I call it, between the end of earnings season and the beginning of the next earnings season. So it's all about data this week, Renita, and so far the data's been a little stronger than we'd like it to be, and the government shutdown, the euphoria there, didn't last very long.
No, you're right. It didn't last that long this morning when we started the trading day. Before we started the trading day even, there was really a very little huge part of it or part of markets that even reacted at the start of it, though. But when we look ahead to the end of the week, though, we know we're not getting too ahead of ourselves. But you ran through some of the employment data that's coming
Testing
out.
that low
Are there
there.
any other things that you're looking for the rest of the week?
Well, for this week, when we look at, let's say Wednesday, we get the ADP jobs data. That's private payrolls. That'll be important. But we also get PMI composite flash, ISM services, factory orders. We get mortgage apps again. That's always an interesting number. Thursday, we'll get jobless claims. That has become a very interesting and important high-frequency data point that we get every Thursday. We also get international trade. That's the trade deficit. I don't know how important that is right now, but the employment number expected to downtick in jobs, downtick in unemployment rate from 3.8 to 3.7. But the wages data, right, with everything going on with labor right now and labor negotiations from all different sectors of the U.S. economy, I think you got to watch the wages data. It's expected the month over month to pick up from 0.2 to 0.3. The year over year number is expected to stay stable at 4.3%. So we'll watch those numbers right now. But remember, when you look at the rally today in some of the magnificent 7 stocks, at least 6 of 7, the only one that's down right now is Tesla. That is the catalyst that brought us higher earlier in the year. Let's see if it continues to do that as we itch ever closer to their earnings at the end of the month.
All right, Kevin, we're also looking to hear from a few Fed officials this week. So what kind of language are you looking for or even just expecting them to say?
Well, I talk about this all the time, Renita. It's what the Fed does and it's what the Fed says. And you're starting to see a couple of them come out and talk about that interest rates are high enough. We'll see if any of them, Jerome Powell's been very consistent talking about the fight against inflation, and we're not done yet. We'll see if we start to get some cracks, like some Fed officials starting to hint that we've raised rates high enough. So you're starting to hear that commentary come into the market, Renita. Let's see if it continues. That'll affect interest rates for sure. Not so much today. They're higher.
All right, Kevin Hinks, thank you so much for joining us. Now for a look at a few stocks on the move, let's bring in Caroline Wood. She's senior markets correspondent reporting live from the New York Stock Exchange. Caroline, today was EV delivery day. We saw all the majors come out with their numbers. Can we start with Tesla? Because a couple of analysts last week expected, or they said that Tesla would have lower deliveries than expected. What did we see?
Well, that was exactly the case, Renita. Tesla delivered even the low end of some of the estimates, the 451. They kind of range from 451 to 466. Tesla actually missed all of those estimates. It ended up delivering 435,059 vehicles in Q3. At first, we actually saw shares higher today until this afternoon.
There's another
and they did
bounce
turn
on that
lower.
level.
So Kevin was talking about the Magnificent Six because there was one missing from the rally today, and that is Tesla, although it's only down about 0.5% right now. So as I said, it delivered a little bit more than 35,000 vehicles. That was a decrease from Q2 when Tesla delivered more than 466,000. It was higher than the year-ago period, but a sequential decline. Company blamed planned downtimes for factory upgrades, which
There's our
we
little
know about
bounce.
from Tesla's earnings call. But they did
Gotta
say
move
that
back up to
2023
VWAP.
volume target of 1.8 million remains unchanged. So they are sticking with their guidance. I think Dan Ives, who we know is a very Tesla Herma Bull, said in a nutshell there was nothing to write home about, better days ahead for Tesla. So, not anything too impressive there. I will say we're seeing weakness across the board for all of the EV makers, even the ones that did better than analysts were expecting. Rivian is down about 3% today. It delivered 15,564 vehicles during the period. That was up 23% from the second quarter of 2023, in line to a beat, depending on which estimates that you looked at. Also said it's on track to deliver its annual target of 52,000 vehicles. So that was in line with its previous guidance, and actually got an upgrade from Evercore.
Yeah, GME alert. Buy now, pay later.
A price target of $35. Meanwhile, taking a look at some of the Chinese EV makers that are listed here in the U.S., NIO, XPeng, Li, all lower today as well. NIO is off about 3% despite deliveries increasing 44% year over year in September. So they do September and Q3. So when you take a look at the Q3 numbers, they actually increased 75% to 55,432. XPeng delivered 15,310, so a 12% increase over the prior month, 81% increase over the prior year-over-year increase. For the third quarter, they reached 40,008 units, so that was a quarter-over-quarter increase of 72%. And then Li delivered 36,000 vehicles in September, and then that was actually a monthly record. And then in Q3, 105,108. So that was actually up 296% year over year. So some pretty impressive, comparisons in terms of the percentage comparisons. But we're actually seeing Li and XPeng also lower by about 2% today. So just not a good day for these EV makers overall.
Definitely does not look like one. But at least now it looks like, at least comparison percentage-wise, Tesla has some competition coming up from it. But let's switch over to NVIDIA right now, because it has a note out from it, a bullish note from Goldman. Tell us what the details are.
Yes, so NVIDIA, one of those magnificent six today. Share is actually up about 2%, helping lead the NASDAQ higher. It's the second best performer on the NASDAQ today, behind Zscaler. And, of course, it had a tough September, but it's been a really impressive year for NVIDIA. And the calls just keep getting more bullish. Goldman Sachs added NVIDIA to its conviction list, kept a buy rating on shares and $605 price target. So that price target implies more than 35% upside from today's level of about 444. It's already gained over 200% year to date. Goldman expects NVIDIA to maintain its status as the accelerated computer industry standard for the foreseeable future, given a few reasons. Its competitive moat, the urgency with which customers are developing and employing increasingly complex AI models. So all reasons that it thinks that this stock can continue to gain. And I will say, despite these impressive year-to-date gains, Bernita, as I said, up more than 200% year-to-date, 204% year-to-date, all but two analysts at this point still have a buy rating on shares. And the 605 price target from Goldman Sachs is in line with the median, but it's certainly not the highest. You take a look, HSBC is at $800 a share, Barrett's at $750, BNP is at $745, so the price targets just keep getting higher and higher as NVIDIA keeps gaining.
You're right. And some of the rhetoric I've heard recently is on what's really like a number two to NVIDIA. Have you heard a little bit about that as well? Obviously, the AI trade did impact most of the chip stocks in some way. But are you looking at who now may be number two beneficiary of the AI wave behind NVIDIA?
I think it really depends, too, because keep in mind there's the chip makers that are powering the AI, but then there are the companies that are actually going to be benefiting from AI as well. So there is some question as, once the chips are already made, or once there is more competition for NVIDIA, some of these other chip makers
rallying up a bit.
Can NVIDIA continue to gain market share in that realm? I will say, I just think overall, NVIDIA is the clear winner. But if you take a look at some of these other stocks that are also up triple digits in terms of percentage gains this year, it's all because of AI, really. It's really what's been the
now that's broken support.
Driving stocks higher this year, and
no rush.
On,
no rush to go long.
Performance, at least so far, it seems like that's going to continue, because that's where we're seeing strength today.
All right, Caroline Woods, thank you so much for joining us. Now let's continue the conversation with Chris Constantinos. He's director of investment.
Start looking at fib levels, but horizontal supports give you like, oh, someone's saying 12. 12 could be like 10 better.
A down month for markets in September. Looks like we're continuing.
Oh, look at that red candle on SPY. Geez.
First day of October, the first day of the quarter.
The chop.
But how are you feeling right now about the way markets are moving?
Yeah, and by the way, thanks for having me today. So, you know, I've done this long enough to know that the fall can be kind of a volatile time. In fact, you know, my team's done some work around this from a historical seasonal perspective. And, you know, September tends to be the worst aggregate month for returns of any of the 12 going, you know, back across the century of market returns.
Is it below 08 highs?
October tends to be the
below
month
08
where you
highs.
see the most bottoms formed. So I think this is kind of par for the course.
Did you get that high in 08?
The last couple of months, you know, and it certainly lines up a little bit with the macro backdrop, which is central bank policy is always a volatility creator, and there is a fair amount of intrigue, shall we say, about
what chart you're looking at, but I don't see that.
So for me, it's kind of all par for the course.
Below
so
08
far, I'm not
highs.
viewing this pullback as anything more than a relatively
The highest it got
that makes sense.
prior to the squeeze was
so speaking
$10,
of the Fed,
$11.
Thinking, are you in the camp of folks who believe the Fed is done hiking now, or do you think there's even one more before the end of the year?
Let's see, when was this? 2013,
yeah, actually, you can put us in the camp of
08
folks who
you
think
had
there's probably one more out there.
1073.
And I don't think that's necessarily
maybe you're talking about
something
pre-split.
to be, you know, extremely scared of if you're a market participant.
But this
you know,
is adjusted,
speaking,
so
the reason that there's probably another
split prices is
somewhere
just
on the horizon
$11.
is the fact that the overall
market cap wise, it's still much higher.
Actually pretty constructive, right? We've seen this ongoing resilience in the labor market. You know, as we now cast GDP, the Atlanta Fed does a nice job of trying to predict you know, quarter forward GDP with more high frequency numbers. And, you know, that's looking something like close to 5% GDP growth for Q3. So, you know, and then of course we also had at least a temporary relief on the government shutdown issue over the weekend. So you put all that together, I think it gives the Fed license to probably, you know, have one more hike here. And by the way, I think this Fed is acutely aware of the past. This Fed is full of financial historians who very acutely understand, you know, what happened in the 70s and 80s and don't want to repeat those mistakes. So you put all that together, I think there's one more.
I can check E-Trade, see what they say.
Let's talk specifically about the S&P 500 because you're watching a couple of levels there. What are you watching?
Sure. Well, it's always easy to, when you're talking technicals, to start with round numbers. And I think 4,200 is a really important round number. We think that 4,200 represents pretty durable support for the S&P 500. And if it broke through there, we would have to, I think, revisit our views pretty significantly. But for right now, we expect the 4,200 level to hold.
This is weird. Yeah, E-Trade's showing that too.
You know, we expect we're going to be range bound here for the foreseeable future. We think on the upside, you know, 4,600
not
is
even
also
like it's giving a split price, it's just higher.
And given some of the current intrigue, as we've talked about earlier, we're probably just going to be,
That's
you know,
so
trading
weird.
in a volatile but range-bound sort of mess here as we head throughout the fall.
You know what? I had a conversation this morning on Morning Trade Live with someone who said because of the volatility happening in markets,
what the heck?
Investors are moving more.
Maybe it has to do with the failed
also because of the yield that they could get
split
as well.
dividend.
Is that something you're seeing too?
Oh, absolutely, 100%. You know, I was actually
just jack the prices
looking at
up.
some money market data this morning, as a matter
Like
of
messed
fact,
them up.
And I think it's
That's not even like it.
clear, right? I don't think that it's a stocks versus bonds competition right now. I think it's a risk assets of any type, of any stripe, versus just parking it in money market funds. That is certainly what our clients, that is the decision that our clients are weighing as we speak. And, you know, for those that are weighing this decision, look, I understand that when things are, you know, scary or volatile,
yeah, you're probably right.
Reaction is to try to, you know,
I would trust E-Trade over Webull.
But what I think people don't understand is that interest rates can move pretty quickly. And
that's super strange.
You know, you lock in a 6-month CD rate or something like that looks really attractive, but
maybe
in
I
6
won't
months
transfer
you're
to
going to
E-Trade.
have to re-up it. And the interest rate environment could be, you know, significantly different than what it is today. Also, from a psychological perspective, it becomes very easy just to say, well, look, I'm going to leave it there. I'm going to leave it under the mattress. But as soon as things gets better, I'll invest. And what we found is that the psychological biases that we all have as humans usually don't lend themselves.
So this is actually a big level just broke.
Investors
That's
getting
probably why there's so much
reinvested.
volume.
And then you wake up one day and you have a massive amount of purchasing power risk because
Because on
you kept
Webull,
it
I'm
there.
not, I'm not any,
you know, I
at
still
any
think as we
significant
look out
levels.
over the next 12 months, we still have a
Whereas,
fairly
yeah, on E-Trade, that
constructive view,
15.
on U.S. stocks, and also, by
That's
the
crazy.
way, on certain parts of the bond market as well. These higher yields, you know, bonds
Yeah,
are basically
1539.
math, and the higher yields that are
It's literally right
that
at the
exist now in certain parts of
right near the
treasuries and
highs. So
corporates actually look relatively attractive to us as well.
Okay, thanks so much for the insights, Chris Constantinos.
given it did double bottom here before, so we could still see a triple bottom on it.
Dive into dividend growing stocks. Our next guest
Makes more
has a
sense with
few
all this
stocks
volume
he's
though.
watching that fit right into the dividend world. Market on close.
Even more of a level than I realized. Wow. Don't worry, Ace. It'll settle in the single digits. Back where it was comfortable before the squeeze. Between $3 and $10. Well, maybe 15. I don't even know what the prices are. Somewhere in this range. No, I'm just kidding, but don't be surprised if it does get down to the single digits. And that, I mean, that memo, unless you think it was fake, that's pretty grim. I don't think they're going bankrupt anytime soon, but the market cap could get shaved down quite a bit more, especially if their market starts to turn around even worse. You see more of a market crash.
First off, can you tell us why the current environment, the current market environment, is suited for those high quality dividend growers?
Yeah, I think the key things that investors are grappling with today are rising interest rates and inflation, and the two of those obviously are related to each other. And I think in an environment like this, high quality dividend players are really a terrific place to be. I think for a couple of reasons that's the case. First off, I think that we're seeing on days like today, and I suspect there will be more days like this, when you have a market going through pretty significant interest rate increases, it's often going to result in pretty choppy trading. And in choppy trading environments, high quality dividend payers tend to do well.
The memo was ridiculous.
Because the dividends
I don't know.
provide strong
I ripping up here to VWAP.
That'd be the first point. I think the second critical thing that we think of,
I don't know. I didn't see it. I just
right now is because of inflation. And
have to talk to someone.
We're seeing it. We all see it in our lives every day. Costs are going up all around us.
One of the employees at GameStop, see if they got it.
Protect our purchasing power. And really, the only
I'm assuming it was to higher ups.
And so, unlike bonds or many other types of instruments, high quality dividend growers, throw off good cash flow today and compound that nicely over time. So we think it's really critical for investors to be looking at these today, and also we believe that it's not just now that this is really an evergreen strategy. High quality equity investing is really the core of what folks should be doing.
It makes sense when you talk about the situational aspects, what's happening in the market. But
if they make a good acquisition, which I think they probably will, they have a lot of cash,
when they research
then
dividend paying stocks.
Yeah, I don't think it'll stick around at low prices for very long.
That's a great question.
It could add a lot of value if they picked up like Funko or Newegg or
just about the current yield.
some company that would just bring a lot of value that's making money.
Equity income investing isn't just the current yield, but really the ability to compound.
Without that, though, yeah, it's kind of slowly dying. Even though they're cutting costs and closing unprofitable stores and going to e-commerce,
really take advantage of the fact that equities going to participate in the growth of the company, and equity investors do that through the growing dividends.
They haven't captured enough of the market share from Amazon.
Look at the current yield, but really marry that also with dividend growth. Looking at the company's balance sheet,
and that's a tough battle to win, anyways.
Strong enough and healthy enough to continue to pay the dividend through ups and downs. We look at the payout ratio. So kind of the sweet spot for dividend growers tends to be a payout ratio of about 40 to 50%, which means that the company's dividend only represents about half the earnings of the company. And that's important because, again, in a downturn, it means they'll have cushion to continue to pay the dividend, and it also gives them room to continue growing the dividend. So from a dividend factor, those are the things we'd look at.
Let's talk some stocks you're looking at right now. So start with T-Mobile.
And be frugal, but then
what are you finding most attractive about it?
He said,
so T-Mobile, obviously,
if the ship goes down, I'm going down with it, or something along those lines.
And T-Mobile has really been winning in the wireless game.
I wouldn't imagine him to sound.
And his dividend investors actually,
he could sound more.
We were precluded from investing
more
in it because T-Mobile, unlike AT&T
personal
and Verizon,
when it's a memo to his employees.
They just initiated one last month, and we think this is
I wouldn't expect him to sound super.
The current yield's about 2%, so
super legal like he did in the letter to GME or barbecue. What's PBI, Cassie?
Really good dividend growth. And I think
for an acquisition,
T-Mobile is the best player in the space by a long shot, and it's really for a combination of reasons. They have the best spectrum position, which means they have the ability to provide the best service and the best wireless service. Right, several years ago that was not
all right,
the case,
Jay.
But over many
Good
years
seeing you,
they
man.
improved their service. And because of their spectrum position, they're able to provide this superior service at a lower cost.
I think it was the ship comment more than anything. No, it is bullish to see you not taking pay, sure.
So they have a better product that they.
But everything else didn't sound good.
Deliver, which means they can charge lower than their competitors and still be successful. And we've seen this all come together over the last many years, where they have been outgrowing the industry pretty handsomely, gaining subscribers at the expense of Verizon and T-Mobile, and they're able to raise prices under the pricing umbrella that their competitors provide. From a stock perspective, you got a 2%.
Might be time to get some back into some February puts on SPY.
Free cash flow yield of about 10%. And they're going to be returning essentially all that to shareholders. So next year, we expect them to pay a dividend yield of about 2%.
Haven't reversed, really just consolidated since we've hit this lows.
Really terrific shareholder return from T-Mobile.
Haven't had like a bounce.
Why T-Mobile is attractive. But next, let's talk about another stock that you have going up, Avalon Bay Communities. Why are you looking at that one?
Yeah, so Avalon Bay is one of the largest and best-in-class apartment REITs in the country. They own really high.
Yeah, I don't know if he can or if he just doesn't even. He doesn't get involved.
Suburban markets, as
even if it was fake, we've never seen him rebuttal anything that's been said that's been fake.
Balance sheet, low debt, so that's a hallmark of everything we look for. And you think
I've seen him make some like sarcastic remarks on Twitter
rent growth is slowing. It was
about him buying all the stocks.
But you think about employment, and employment is very
but nothing official and nothing
is at all-time low. So people have jobs, wages are going up.
Unlike
people
rumor,
have some money in their pocket.
I don't know.
And you think about alternatives, and we all know that mortgage rates have skyrocketed. So if you're living in an apartment and you're hoping to move out and buy your own house, it's become a lot harder to do. You're probably likely to stay put in the apartment a little longer. From a supply-demand perspective.
Go ahead.
From a supply-demand perspective, from the apartment industry, given what we've seen in inflation in terms of construction labor, construction materials, and also rising interest rates, it's much more expensive to build a new apartment building today than it was just a couple years ago. So we think that means you're going to have relatively restrained supply in the market. So you have healthy consumer who is employed and wages are going up. They're not able to really move out and buy their own homes presently, or not as easily as they could have a couple years ago because of mortgage rates. And you're not going to see a lot of new apartment construction because of inflation and rising rates. So we think that sets up nicely. And this is a stock that yields 4%, and we expect attractive dividend growth going forward.
And it looks like it's trading at maybe midway through between its high and its lows for the year. So would you consider that a good entry point as well for this stock?
Yeah, we think that this is a good entry point given the current, dividend yield, given the outlook we see for them and the fundamentals they're reporting. So yes, we like the stock here.
Okay, and lastly,
we like the
talk
stock.
about Sempra and why you feel like that's a good stock.
Yeah, we think Sempra is a high-quality, diversified utility. So they have utilities in Texas and California, and then they also have an infrastructure business with LNG, liquefied natural gas exports. And we think it's a very well-run company. We like that it's diversified from a risk perspective. It has a good balance sheet. It yields 3.6%, so an attractive upfront yield. It trades at just 13.5 times next year's number, which we think is a very attractive valuation. We think they have a best-in-class management team, and we think the dividend and earnings can grow in the high single digits for as far as the eye can see. So just a real high-quality, diversified utility.
All right, Michael Clarfield, ClearBridge Investments, thank you so much for joining us. Now, up next, it's time for Options Corner. Tom White joins us to take a look at some unusual options activity that caught his eye today. He'll show us some bullish trades in Zoom Video, Rivian, and NVIDIA. Market on close. We'll be right back.
Yeah, I'm gonna check it out. I'm excited to see it. Might go to the theaters, but we'll watch it at home. I had the two. Oh, another flush. Jeez. Just giving it to her. How come they're not pumping the dumb money movie? What do you mean? I think Adam Aaron tweeted about it. I wanted to see it when it came out. Vegas, Vegas, Vegas. You want to buy some real estate? Going to party? Take me all in. Alright, I'm gonna let it just expire now. Yep, I'm gonna burn the time. I don't know. I remember him tweeting about going to see Dumb Money and talking about the theaters and stuff. Would have had a flush. This somebody has a phone. Nice. Nice. That's where I was gonna burn the clock. Three aces. That ain't bad. I forgot what the. Alright, I'll play along. Clubs, good. Don't want an ace. Got a straight. That is neat. Oh, that's what you're talking about. She gets in that sphere. Yeah, that'd be cool. Rallying up there. 30 minutes into power hour. Supposed to view up again. Summerland, Vegas. Oh, he tweeted before the full release. 3.8 takes it down. 4.5. You're wondering why he's not tweeting more about it? I don't know. Maybe we'll hear.
There's only 4 days to expiration, so you really have.
I'm waiting to hear about the.
But I think somebody taking
their
a cheap
Swift
shot
data.
The upside, that
They were
break
kind of-
even is 17
I don't know what they got
or
from that.
76.17 over the
The
next
theater.
4 days. It's about 9% above
bet it's
the
pretty
current
good.
share price in there. But I think there's probably going to be some volatility in this name tomorrow, just based on that Zoomtopia.
Needs some kind of catalyst because AMC has
It was
been
some
pretty dead
volatility
since
today, just
it
as
sold
we were
off from
talking,
the
it
split.
turned higher, which really
Which
is more like
it's just
unchanged on the day,
was
up
a
0.2%.
kind of an overreaction, I
Yeah,
think.
it was up over 1.5% earlier on in the session. I
Buy
think maybe
above
with
VWAP there.
investors and traders probably thinking that there's going to be some positive news on this investor conference.
Absolutely, but let's take a look at the next stock, which is Rivian. Delivery numbers came out today.
They did, and got an upgrade out of Evercore this morning also. They put their price target up to $35 from $30. That was the positive that came out actually before the delivery numbers came out. This is one of those players in this space, the Evercore guy thinks that this might be the start of the new Tesla because they said
Mini mansion in
brand
Vegas.
scale economics, vertical integration. They're starting to ramp up pre-production of their R2, which is going to be their small SUV that's going to compete. That's, that area in the automotive space that's the best sellers, right? It's the Model Y for Tesla. Their R2 that's coming out, there's big hopes on that. But they did produce 16,304 vehicles. They delivered 15,564. The curious thing, Renita, is every car they sold over the last 2 quarters, they've lost $33,000 per car. So they had $18 billion on their balance sheet. That's been cut in half because they're spending so much on production, wages. It costs a lot to make these things. The average selling price $88,000, and they're still losing $33,000 per car. So it's about scale, and the Evercore ISI analyst seems to think that they're on the right track, and they get the new model release in the beginning of 2024. That's supposed to help. But we did see some call buyers in here, and talk about long shots. So they went out to the November cycle. So you're going to capture earnings is on the 7th of November. So this trader went out to November 17th monthly option series. So you're going to capture that earnings event, which could be a catalyst to the upside. They bought over 10,000 of the no 30 strike calls, average debit of only about 90 cents. So that break even of just under $31 per share over the next 46 days. That's 31% above the current share price in there. So you're going to need that a couple more analyst upgrades and probably some positive news on their earnings call on the 7th.
No bounces on GME today. This is
the normal daily average volume that we've seen over the
pretty
last
ugly.
5 trading sessions. So
Might
ramping
see some
up on
big
the
gap-
upgrade and the production
big
numbers.
gaps and
Over
moves
155,000
this
calls
week.
are traded across all option series
Just
today.
with all this
So,
volume.
yeah, a lot of flows in there today.
Yeah, and falling today.
Yeah.
Down more
Yeah,
than
that's
3%.
pretty bad.
Year to date, though, it's still pretty strong. It's up more than 27%.
Might be worth it to even buy some
year to date.
puts.
Right.
But we have one more to look
Right.
at, NVIDIA,
Velocity
which has,
might
of
pick
course,
up.
been the king of AI.
Yeah, king of AI and king of winners this year because
Yeah.
the stock's
No,
up
I'm just
over
playing around here.
200% in 2023. Goldman Sachs analyst upgraded this stock today, $605 price target. Whew.
Wow.
That's pretty far above
Still-
the current share
still
price.
learning.
Now these are 12-month price targets, so you got to take that with a grain of salt. But this stock kind of making some inroads from that fall.
Maybe
that we
jump
saw
into
at
some
the beginning of
games at some
September.
point.
The last few trading sessions, this one's been positive. But I think a lot
Real-
of the
real games.
upside here today is based on this upgrade out of Goldman Sachs. They did state there was an article this week.
Just helps him from overtrading. There's not a good
Business
setup on the
Insider
SPY.
about
Just
NVIDIA starting to get into the potential
wanna
of
be here
digital
to
advertising, right?
watch it in
where
case it
they're gonna
does,
try
but
start
don't
taking
want to,
advantage of that, plowing into that area with their GPU chips.
Or board trading.
And those are the best seller. They don't have any competition right now. They've got about 90% of the market. Later on this year, we'll see what AMD comes out with. They're saying that chip's going to be the best in breed there. But it's all about innovation and first to market, and NVIDIA's been winning that war. But we did see some call buyers in here, real short-term positioning, probably based on the upgrade and the early move in the stock. October 6th weekly, the 450 strike call. About 50,000 of those were traded throughout the day today. Average debit of just over $5, about $5.20, so that break even 450, 520 over the next 4 days. It's only about 2.5% above the current share price in there. That's the strike in that near-term option series that's got the most volume. It's going to have the biggest open interest position. So, yeah, a lot of people taking a bet that by the end of the week, this stock's going to be above $500 or $455 per share. And if they're listening to the Goldman analysts, $605 price target, maybe it needs a little more time, but this is really short-term positioning from these option traders.
It's just got about $10 more to go to reach that level, to be over $455 a share.
I mean, that could literally happen in 2 hours tomorrow morning. You know, this stock moves pretty volatile.
All right. Well, thank you so much for running us through that information.
You got it.
That's Tom White, our senior options contributor.
Yeah, I like to trade Tesla. I haven't traded NVIDIA really at all.
And Jenny Horn gives us an update on Apple,
but yeah,
and how
I've
it could enter the world of
probably, like, percentage-wise, I've done the best with Tesla
Be right back.
as far as trading options. I don't know why, just for some reason. I've done pretty well with like credit spreads and stuff on it. Yeah, nice liquid options. A couple of years I'll probably have bi-weekly options on Tesla and NVIDIA. Maybe even sooner than that. You've done the best with Tesla? Isn't that weird? It's like I don't even trade it that much. I mean, I haven't in a while. But even when I have, it's like, it's just been kind of, I'll see a setup and I'll take it, which is probably why I've been better with it. I haven't just forced trades on it. I don't know. Not over traded that ticker. Only taking the best setups. "20 minutes, buy back to its happy place."
Of TJM Institutional Services. Chris, thank you for joining us today.
Thanks for inviting me.
Absolutely. Can I ask a quick, broad question? The greater commodities complex. What are we looking at now? Because it's been quite volatile for the entire year, really, just the general commodities complex.
Well, in general, I think that the one thing everybody watches is crude oil, right? And we had been in a pretty big downtrend. Crude oil dropped, a year and a half ago, we were at 130. We dropped down to below 64. That just in May, we were at 18-month low. So that was a big move lower. I think a lot of people, thought that we were going to be going lower for longer, especially with rates being higher for longer. And you've seen this recent squeeze, and it's actually been kind of a mixed blessing. It's not good for people that have to obviously, buy oil or to use oil for their inputs. It has made gasoline a little bit more expensive. It's made diesel a bit more expensive, but it's also been a little bit of a support for the rest of the commodities. So for the farmers out there, we've had a little bit of support, not a lot, but a little. But overall, I think that was the one thing. A lot of people got over their skis thinking that the inflation trade was over, and we've seen this rally in crude oil as the market's saying, well, maybe that inflation trade really hasn't completely disappeared yet. So I think that's the big picture to look at with crude oil. Also, the U.S. dollar. The U.S. dollar had been at about
high there on SPY. This is just an ugly chop to get up there, though.
Almost a one-year high. I think that's also got a lot of people
find it and hold those calls.
Well, excuse me, if the U.S. dollar pushes up to 107, I think that's something, again, which kind of counterbalances the rally in crude oil. So it's kind of a mixed bag. A lot of people who are fundamental traders, people that like to look at supply and demand, they've been really chopped up this year. The market has been very, very technical. What does that mean? It means we've been trading, chart points. So it's been a difficult year for a lot of fundamental traders.
For sure. Follow up on crude, because it did dip back below $90 a barrel this morning. What are you watching because of that? Do you see markets reacting negatively because of that?
Well, it's big picture. If you go day to day, you can get lost. I think I always try and tell people I work with to look at the big picture, look at the 30,000 view, like you're in an airplane looking down. Crude oil was heading towards a very big level, $97. Why is that big? Well, it would have been halfway back of the entire break from 130 down to the May lows there around 63.60. Markets like to go to halfway back market levels. We just missed it. That's number one. Number two, the whole world knows that the United States sold 180 million barrels of crude oil before the election at an average price of 95. Well, lo and behold, on Friday, when we hit that level, that gave a lot of people concern because that SPR has not been refilled yet. We were told they were going to look to refill it around $70 for a variety of reasons I'm not privy to. They decided, obviously, to not pull the trigger on those buys.
Thanks, Stacy. Good chatting with you, buddy.
Because if they do have to refill the SPR, that's a gigantic bid out there the market's leaning on. So that's why I think this 95, 97 level is very, very big. I will continue to watch it as we finish the year.
All right. And as we finish or look into next week already, we're looking into next week, but it's because the WASDE report comes out. What are you watching in the area of agricultural commodities?
Ooh.
Well, it's a futures market.
Only one card that beats me. Thank you.
A report on Friday from the USDA. We get another.
I guess you could have a full house too.
Week. And you are correct. Those reports represent a lot of risk. Where are we at?
There's other hands that could be me. A couple others.
We have more wheat than we know what to do with. The crop got bigger, and despite all the worries in the world about what's going on in the Ukraine, crude oil has dropped over $2.
You Tigers, you listed on the same page as a private company.
It's just been kind of an elevator trip down. We are at 2-year lows there. People are trying to see if we can get some sort of support. So we'll see if the USDA changes anything up on the supply and demand report on the 12th. Same thing for corn. Corn, we had been around $6.30 in summertime. We dropped down to below $5. We're fighting it out at that $5 level. That's a big psychological level for traders and producers. And then lastly, soybeans. Soybeans have been kind of the best performer in the row crops farming community across the year. Just last month, however, we lost $1 a bushel. So the markets are all very oversold. The USDA could provide some information on the next report, which would correct that. There's lots of opportunity on those reports. If your viewers out there are looking for, you have a fixed point in time where prices can move violently. And if you're a trader out there, you want movement. So there's no guarantee whether or not we're going to go higher or lower, but at least you know that on that 12th at 11 o'clock, when that bell rings and they release the information, there's a chance that, you could catch a move. And again, if you're watching this show, you're trying to catch a move and make some money trading.
All right, we'll keep an eye out on it on the WASDE report next week. So Chris Robinson, TJM Institutional Services, thank you so much. Let's check in on a developing story now with Jenny Horn, markets correspondent, as well as co-host of Next Gen Investing. Jenny, you're taking a look at Apple. It's got a potential venture in its streaming platform. What's happening?
It does, and fortunately for Apple, they are very cash heavy, so they have money where they're able to form some of these partnerships, offering premium prices that perhaps some of their competitors won't be able to pay for. So we did get some reports actually from Business F1 magazine that said Apple could be looking to pay around $2 billion annually for the global rights to then Formula One. So this is pretty significant. This would be around double what the league currently gets from its various partners that have regional rights to the sports. For example, one of those is ESPN, which did renew its U.S. rights, beating out several competitors and media companies. With several of these have been really looking on getting into the deal. So there is the thought that Apple could look to acquire the rights and pay prorated fees until it can get 100% exclusive rights. This is according to this report. ESPN pays around $75 to $90 million per year for the U.S. Formula One rights, a significant increase in the past that had to pay the league around $5 million annually. So Apple would be offering, significant upside to what is currently being paid. But again, they are looking, according to this report, for exclusive rights. They've also been pretty pivotal in the way that they've been able to get, obviously, Lionel Messi. And in terms of their MLS season pass, they have been seen as the part of the deal, and this is so fascinating to me, that they inked out with him, is that he gets a portion of the fee anytime someone subscribes to that MLS pass. So it's a huge reason, actually. I was reading that he even came over to the United States because it's such a good deal for him, very lucrative. And unfortunately, like I said, Apple is cash heavy. They can afford to do these things that perhaps other streaming companies aren't, working out these deals and now getting the interest of so many in terms of soccer. I know it's called football, but here in the U.S. we call it soccer.
Yes.
Definitely one that has drawn in so many people that are now new to the streaming world. For Apple, they've gotten a ton of subscribers, they said, just from this MLS season pass.
Apple and Formula One could be a winning combination, and you're right, they have the leverage to do it. Thank you so much, Jenny Horn. Now, coming up, let's close out this market session and get the big picture from the team at Charles Schwab. We'll find out what's next after the government shutdown is averted, and then we'll find out a little bit more. Market on close. We'll be right back.
I drop a little bit there. 10 minutes Fugazi, right at that VWAP chop. Wow, look at that pop for Fugazi. Oh yeah, we're in it. We're almost a 5-minute finger slap. Straight got there. Two pair? What the? New dockets are dropping, Maui? You didn't miss a good day for trading, Guts. You did well. You were much more productive. Very choppy today. Whole day, pretty much. Like, we were all just very controlled. The rallies were controlled. Sell-offs were controlled. Rough. Five-minute finger slap up to that high. Guess I could have held those calls. They're all that chop. This buy rally, they're trying to go green.
President Williams at a conference in New York. We've got many of them speaking this week. There'll be no break from all the talking heads at the Fed, and that has really pushed the market towards repricing and the potential
All day
for
do nothing.
another rate hike. Now looking at maybe a 1/3
Coming right
chance
back
of another rate hike
close to
at the
open.
next meeting. We don't think that's likely, but still that's pushed out. And Renita, what's maybe even more important is the higher for longer outlook for next year. The market's now only pricing in
basically
50
where we
basis
opened.
points of rate cuts next year, starting somewhere maybe in the
Yep,
fourth quarter.
that's
a
chop
far
for
cry
sure.
100 basis points starting early in the year that had been expected.
I think those calls would have done well though.
Where do you stand
They held
on
them.
the soft landing argument?
Well, I think there's a case in the U.S. for a soft landing, maybe in the services sector. Certainly, manufacturing is suffering. We've taken more of a nuanced view of the economic picture, one that shows that trade and manufacturing are indeed in a recession now. It's not really debatable. Factory output is down from a year ago and has been falling for quarters. Trade is as well. Exports are down. But at the same time, the service sector has done pretty well on the strength in the employment situation. We'll learn more about that, of course, on Friday, where it looks like we'll get another downtick in the number of new jobs created. I'll be interested in this earnings season, Renita, for what I hear from business leaders in the last couple of quarters. They've talked more about layoffs than they have about hiring. If that accelerates through the third quarter earnings reporting season, we could begin to get some concerns about the service sector begin to show up, which would start to look like a more traditional recession.
Definitely we'll be looking out for that. We've got jobs and jobs and jobs data coming out this week. But lastly, Jeff, anything that you're looking at on the international front?
You know, one of the interesting, so international stocks really underperformed today. A lot of that on the dollar and concerns there about higher interest rates in the U.S. pushing that down. I'm watching oil prices. That's a global commodity market. We've seen oil prices dive back below $90 after money managers seem to have accumulated way very bullish positions. 15 long contracts for every short contract traded by money managers. We know 10 times more oil trades than is actually used, so it's a good indication of where supply and demand is, and it seems like they've been overly optimistic on the supply and demand situation there. It's now shifting back the other way. We've got an OPEC meeting on Wednesday. I don't think they're going to announce that they're going to reverse any of those oil cuts, but I think there's maybe more risk to the downside in oil prices than we've seen for some time. That could affect global markets.
Okay, well, we'll keep a lookout on that. Jeffrey Kleintop and Mike Townsend of Charles Schwab, thank you both so much. Now, coming up next, we have the closers panel, and we'll bring down today's market action, and we'll have more right here on Market on Close.
All right, there we are. Let's review some trades. Wow, you see how popping to close? That's quite the print. Holy smokes. Squeeze engaged. That was crazy. Hey, psych you up. See on Discord, like, I'm gonna go over my trades today. It was a choppy day, I kind of knew it too. Red day, not too bad though. Too bad. All right, first trade was at 956. Right there. With 2 puts. Interesting. Interesting. What? Okay, I see. So, came down, flushed, bounced. Retest on kind of VWAP. Think it's gonna keep coming down. Okay, alright. Didn't happen like that. Closed out of one of those puts at 1023. Held through this whole rally. Closed one right there on this red candle. So not a bad exit. That was an L, small L. Ideally, I would have closed it. See, it even came back down here. I should have closed it there for sure, but this was happening pretty fast. Oh yeah, this was when that data came in. That's right, that's right. I got stuck. I forgot about this data coming out. That would have been a fine trade. Data came out 10, it ripped. I didn't want to just close it on a huge green candle. This was a pretty big reaction to that ISM data too. So I held it and closed it out at 10:23. Whereas we were in a chop and I didn't know where we were going. Closed one of them, still had another one. Bought 2 more puts at 10:42. Right here. Oh, kind of a little consolidation right here, breaking the channel. Okay. It was short-lived. Yeah, choppy day, choppy day. Better just to preserve your capital, and when there's a good setup, like a great one, just go huge. Until that, you just don't trade, or just trade real small. So today was a pretty small day, thankfully. Friday was not as small of a day. It was going kind of big and not doing well. Bad. So we're at 10:42. Closed, or no, bought 2 more, and then closed one in that same minute. Profitable. 40 seconds later, closed 2 more at 10:44. Oh, that's a beautiful exit. So I actually made money on that trade. I think I was maybe green by then, close to green. I closed out all the puts. Right here. Let's see, 44, 23. These actually weren't profitable. These last 2. Oh, they were stopped out. That's crazy though. From where I opened at 426 or 1240. Wait, 1242. How are they red down here? Must have been a volatile candle to the upside. 10:44.23. Yeah, that's weird. Bought 2 calls at 11:30. Yeah. Hate playing the breakout, and I was. Now the question is, did I stop out quick enough? I cut my losses quick enough because I realized it was a false breakout. Let's find out. Bought calls there, 2 of them. Closed 2 at 10:31. So yes, thankfully I didn't just hold and hope on that one. Would have been a great opportunity for puts there though. False breakout on the top of the channel. Yeah, 31. So missed the puts on that side. That was the best trade today, but really wasn't a great setup for it. I mean, this had a head and shoulders here. I guess you could have seen. This happened fast. I remember I was like, this just keeps going. Before that it was so choppy, and then it just. Anyways, 10:31, 10:47. Bought 2 puts. 10:47. So did catch the bottom of this right here. 10:47 right there. This was a bit of a chase, I admit. Not a good one. Got puts there. It worked out, but bad entry. Made money on it. Sold. Or no, I actually lost on these. Wait, 11:47 to 11:52. How did I lose on these? That's right. Yeah, see, I had a bad entry, so I was nervous about holding. That's the thing. If you're chasing it, you're not gonna have. Nothing's right. Look right here. I literally closed it on this wick. One of these wicks. Just got nervous and jumped out because I shouldn't have been opening it. But closed 11:52. Yeah, somehow on this candle. Then it did this, and then it had that huge flush. That would have been a nice trade for the day. That would have been all I needed right there. Anyways, 11:47, 11:52, and then 12:04. I entered some one put. 12:04 entered one put, and that was all I had buying power on that account for. This was a fine trade. Not a whole lot of downside potential, but not a bad entry. Close at 12:14. How did I take a loss on this? My goodness. Oh, this is, wait. Okay, yeah. I didn't close that down there, I took a loss. Had a fine entry for that little drop, but no dice. So slightly down on that account. And then the other account. Let me see. Oh, actually I haven't traded my second string account. Because I got I unlocked it so I can open up positions. So my second string account, I got 12:05. I got 4 puts. Oh, at the same time, I did the same trade on the other account because I was out of buying power. So yeah, I closed those out. Wait, wait, what? Bought more puts at 12:07. Oh, right here. I was averaging into it. Which I shouldn't do on this account because it's a margin account and I have day trades on it. I'm limited to my day trades, so if you enter it twice, it counts as 2 day trades. You exit both that day, so that kind of sucks. Anyways, average into it 12:07, 12:14. I closed all of them. Right here. For a small loss. Bought 3 calls at 12:15. Yeah, we're getting to that midday chop where I'm just over trading. I'm just curious why I didn't take any profits here. I don't know what I was thinking. Usually I'll take one and put a stop on the rest. See, I stopped doing that. Maybe just exhaustion or fatigue or losing focus. Because back here I was doing that on every one. I'd take profits on 1 or 2 contracts, put a stop on the rest. They'd stop me out. For whatever reason, by the time it gets to noon, I'm just like, whatever, it'll work. That's profitable. I should have taken profits, put a stop on the rest, and then that would have been fine. About to open all at 12:15. A bit of a chase here, yeah. Stupid trade. Break on that channel. That's what I was thinking. Busting back up into that channel. I don't know. Mindless. Closed these out. Took a loss on these two. Close these out for at 12:38. Realize we're in the chop hour. Yep. So started to fall apart here at 12. That could have been an easy profitable one. And this chase, if I had entered it, see, I got out in those calls. I had to be ready to get back into puts because if it's a false breakout, probably just liquidity being built for the other side. So you have a nice trade in the opposite direction. At the very least, I could have seen this head and shoulders being built. I just think emotionally after you're getting out of it, going one way to flip around the other way. Sometimes I'm not as quick on my feet. I did it later in the day, but right here I needed to do it. That would have been a great trade. And then here, not taking profits and stop loss. Wow. 1246, still trading. Why am I trading? Choppy day in the middle of the day. Bought puts. Yeah, not bad. Not a great setup, but I'm probably trying to fix my account. No, I see it. Fine trade. Bought 5 puts tomorrow. 1246. Now it's back into the routine with my third string account. 1249. Saw a nice red candle there. Closed one. Profit. And then put stops on the rest. So if we did have any continuation today and it wasn't ended up being a chop today, I would have had some exposure to some pretty good moves to the downside and to the upside. Not to say there weren't mistakes made, but yeah, then I stopped out of the rest of them at 1251 right here. Oh, how did I stop out here? That's still weird. Okay, bought puts at 106 right here. All right. Again, yeah, if it wasn't a chop day, would have had nice exposure. Sold the first one for a profit, so I was doing it then. I was doing good. At 112 right here, I sold the first one for a profit, put a stop on the rest, I believe. Or no, then I sold another one at 115 right here. Sold 2 for a profit. Look at me. Oh, and then I sold the rest for a small loss. I don't think I had time to get a stop loss in there. Or this is when E-Trade was, or Fidelity was jacking up. I probably couldn't load it. Close the rest right here. I bought calls at 118. Crazy. I just waited till the last hour to do all my trades. Much more volatility, but not great setups really. Calls at 118. Sold one at 129. So 118, sold one at 129. Sold the first one. And then stops on the rest. Got stopped out of them. So small profits because I'm only buying 5 contracts, selling one for profit today. Didn't sell more than that because I guess I thought there would be more continuation. And then I just get stopped out of the rest. So stopped out of the rest at 130. Yeah, right here. It's weird I get stopped out so high. 136. Bought 5 puts. There. Okay, yeah. Yeah. We're making this inverse head and shoulders at that point. Couldn't see it yet though. Bought 5 puts there. Sold them at 152 for a loss. Right there on that green candle. Or no, right here before it. Yeah, I overtraded on this account today. Bought 5 calls. 154. Maybe they flipped the calls. Okay. See. Trade was actually, this was the right trade. Just happened to dip down after. I wasn't averaging in at all today. I was just buying. I wasn't like scaling in, scaling out, but I wasn't scaling in. I usually try and scale in if I have pretty conviction, but since it was choppy, I wasn't trying to scale in case it was the wrong direction. So yeah, bought 5 and then sold the first one at 211. So right here on that candle. and then sold the rest at 218. Oh yeah, this is when I was having problems. So was this even a profit? I don't even know. No, yeah, so I sold the rest for a small loss because I couldn't get Fidelity to work on this candle. Should have sold more up there, of course. 5 calls again. 237. Here. Kind of just gambling at the end of the day, I think. Yeah. Yeah, I see. I see there. Sold them all for a small loss at 239. Yeah, I was hoping it was going to hold this trend, so I was trying to buy the bottom of this channel. And then it... Actually, I got out of them before it really flushed through there, so that's good. Yeah, 239, sold them for a little loss. And then final trade, calls, 245. No, I should have done better at the end of the day here. I'm not sure what. Calls at 245. Yeah, kind of right here. So showing support. Kind of just buying calls in that triple bottom, that support. Well, it's the channel here. And then I could have even averaged in on that. Let's see what happened. 245. 5. Closed them all for a loss at 303. Yeah, I got shaken out right here. So if I was kind of paying attention, zoomed out maybe, kind of let it play out, give myself a little more room this late in the day when it's not going to most likely make crazy big, I don't know, this late in the day where it's probably going to do a move back up to VWAP. Just kind of let it play out a little bit, not just get shaken out so quickly. It's just been so choppy all day. Starts messing with you. That one could have been a nice trade. Could have averaged into it even as it retested the support once more. Then rallied that up. So, yeah, that was it today. I don't think closed a couple out of the Theta farm. So small profits. Positions that went against me. All I need is a day or two to bounce, as long as you're selling premium out of the money, enough out of the money, and have time, and then you can always add time if you need to. Some I had to add time on, but ones that went against me I can still get out with a profit, because that's the nature of cash accrued puts. All the pop and a close, I'm not sure if there was data or just some market imbalances, I don't know. I'm sure psych you up. Yep, trying to keep myself accountable and view my trades, trying to improve. Thanks guys, appreciate the support today. Thank you for joining me on this Happy Money Monday. 420. We get 16 likes on the day. Bad. Pretty slow day. GME did sell off quite a bit. I did absolutely nothing. Closed the day down 0.03%. It's doing more in after hours than did all day. Pretty big sell-off in GME today, down 6.5. Kind of expect it to either gonna bounce right here or flush, and I don't see any signs of it bouncing yet. So look out for some new lows. This increased volume and breaking through supports is not a good sign. And now that it was pointed out to me by you guys in chat that the highs, 08 highs, this double top up here is actually $15 somehow. It's up here and it's not 1073, freaking Weeble. So that's even more of a legit support. So breaking through there, you have all of this area of liquidity. We'll see what happens down here. It's very interesting. It's exciting either way. What AMC do? He's up 2%. Still on this kind of wedge, cheese wedge. A lot of stuff got wrecked today though. GNS down 3.5. No, run is down 10. That's just pitiful. Base is down 2. Teledoc's down. Well, Teledoc would have bounced a little bit. Yeah, Teledoc did have a little bounce. Sort of. Anyways, thanks guys. Appreciate it. We'll see you on Discord. Sub up, like up, comment down. Happy money sticks around. Have a good afternoon.